YouTube's going so that we can record this class for you guys. How's everyone doing? All 15 of you. How's the weather down in Texas, Bobby? My dad said it's hot down there. Ridiculous hot. Good morning, Philly. Nice to see you guys. Hope everybody had hot and windy. Hope everybody had a great long weekend. I did show up yesterday. I don't know, some of you didn't get my note. And it's okay if you missed it, guys. I did the same thing we do every morning. Um, and it's interesting that in this world where it seems so important, hey, good morning, Central Florida. I like Central Florida. You guys had the best winters down there, Smart Deals. I went and visited John in Sarasota January last year. Holy smokes, playing golf, 70 degrees, absolutely beautiful. I'm going to do it again this winter. Nobody tell him. I'm going to sneak up on him and Melinda. Bring my golf clubs. Guys, we're going to do exactly what we did yesterday. We're going to talk about rules. We're going to do what we did all week last week. We're going to talk about rules. And for some of you, this first hour is going to become very redundant. It's almost going to be boring. You're going to be like, ugh, he's talking about momentum again. Man, he's talking about a clear path again. He keeps talking about these entries. And guys, I'm going to keep doing it until you believe me. Until you believe me that a simple approach, a rules-based approach, is the best of the best, I'm going to keep saying it. Philly, how did I do yesterday? It was just rules, right? That's all it was. It's gauging advantages. And man, guys, it's funny. Have you ever met like I don't know, have you ever met a chef? And when he serves you the dinner that he cooked, does anyone have chef friends? And he lights up because he knows that it's amazing and he knows that you're going to love it. I've got a buddy. He is classically trained French chef and he loves to cook for us. And when he cooks, he lights up like a 4-year-old in a candy shop because he knows that what he has is better than anything that I've ever had. Guys, I feel that way when I teach this class. And I want you to feel that way by the end of this class, by the end of your demo. 30, 60 days in, I want you to realize that you have stumbled upon the best software in the industry. And now we're just going to teach you to use it. And we're going to teach you to use it through repetition. We're going to teach you to use it through simplicity. We're going to talk about a couple little identifying factors and then how to take advantage of it. But before we do anything, guys, let's go to Forex Factory. Make sure we're not jumping in front of freight trains of emotion, right? Today is Tuesday, June 20th. At 8:30 a.m., they talked about building permits. It was low impact. Housing starts, low impact. Really not too terribly worried about it. At 11:45, FOM member Williams speaks. It's low impact, not too worried about it. Kentucky Derby pecan bourbon pie. Man. Gary, I don't like pie, but that sounds delicious. I've had bourbon pecans, like, you know, where they candy them a little bit, drop some whiskey on it. That's good stuff. Guys, every morning I'm going through. Tomorrow you can see at 10 a.m. there's one of these red boxes. Fed Chair Powell testifies. That could be a market mover, guys. It means that at 10 a.m. the market may go absolutely nuts based on whatever he says. But it also means that for the hours preceding, while everybody's waiting for it to go absolutely nuts, it might be a little mellow. You might have to sit on your hands a little bit. Ron, I like where your head's at. Thursday, we're going to see medium impact. We're going to see high impact. Guys, these are what we're looking for. These are the things that can move the market, that can make it a little untradeable. So I do that every day. And then I go to the education page, guys, and I'm going to click on the software user guide. This is your NinjaTrader how-to. There's a lot of you guys that are brand new to NinjaTrader. I was brand new to NinjaTrader at one time. And it really, there's a lot of simple things that you can do, but until someone says, hey, make sure you can do this, you don't really think about it. And one of those first things is just scaling charts. And I'm going to bring up my charts real quick. And I'm going to just open this real wide, and then I'm going to knock it out of whack. And I'm going to mess with this chart. And I'm going to make it so everything disappears. Sometimes you're going to wake up and it's going to look like this, guys. It may have a big gray space, and then you see your trend colors. You don't see any of the lines. You know, you're not seeing the bars. There's an easy way to get it back, and there's two things to do. So the first thing is you're going to click this arrow. If it's clear, it means that you've pushed to the left, right? And if it's white, it means that you've pushed to the right. But once you click this arrow, then you at least know that you're in the right spot, whether you see your bars or not. If the bars are still missing, this capital F is always going to bring you back, guys. So it's really pretty simple. If you don't see the most current bar, and guys, your most current bar is always highlighted in black. If you have two charts and they're not both highlighted in black, one looks like it's going up, one looks like it's stuck, click that arrow. If the bars disappear, if you wake up and you're like, man, I think I see the bottom of a bar, but I don't even have the same prices, click that F. If you're like me and you have a very particular way that you want your charts to look, you may need to scale them, put them in the position that's right for you. If I left click on a horizontal axis, it allows me to squeeze things together. This is my favorite look because I want to see where I've been and I also want to see where I'm going. So sometimes I have to take that vertical axis and kind of drop it down a little bit and make sure that I can see if there's Fibonacci areas above me because I'm going to use those for targets. Click that F again and it brings it all back. Guys, these are just simple little things that you're going to want to be able to do because when you begin to simulate, and hopefully you're beginning to simulate on day one, just getting used to it. If you accidentally knock your charts out of whack, right, you want to be able to get them back real quick so that you can see what's going on. Another thing that's so important for new users as you go through and you're learning NinjaTrader, and guys, this is the same for 8 or 7. We enter the market for the highest probability trend trade with a limit order. We wait for the market to come to us. So if you right click above the current price, I'm going to drop price down real quick so it doesn't accidentally hit me. And it's going to give me an option to sell. I right click, it creates a sell limit, and what this says is that if the market comes up and hits this sell limit, I'm going to be in a position expecting the market to go down. And I'm going to cancel that one, and I'm going to go to the other side. If I right click below price, I can buy limit, which means that if this price comes down and smacks into this limit order, I'm now in a long position. And this is how you're going to enter the market, guys. We're going to be able to pinpoint with amazing accuracy where the market is, where it's going, where it's likely to continue, and you're going to use those concepts to enter the market with a limit order. So those are just the little things that I think are important. Go through. Make sure that you can set up your stops and targets. And if you can't, raise your hand in the room. We'll go through it. If I need to open up my NinjaTrader 8 for you, I'm glad to do it. But there are literally videos and slides to walk you through anything and everything that you need. There's no reason to not be able to do it because Nexgen is going to provide you anything and everything that you need to be successful. So all of that comes from the software user guide instructions. The tutorial section, I'm going to open that up. Guys, this is where the magic comes from. This is where every rule that you need is listed, where pictures of what those rules mean are listed. This tutorial section is where my first hour of classroom comes through. And my first hour revolves around a high probability trend trade, guys. My hope and prayer for you guys that are brand new, that are on demo, that aren't consistent yet, is that you find a way to limit yourself to this highest probability trend trade. This trade where every chart agrees with the rules for the trade. You're going to have your strongest triggers and no termination conditions, nothing between you and your entry. Guys, the high probability trend trade is the first trade that I teach, and this is a trade that typically wins 70 to 80% of the time. Let that sink in for a second, guys. 70 to 80% of the time. If your goal is to be a successful trader, if your goal is to be a profitable trader, doesn't it make sense to put yourself in a position to take a trade that typically wins 70 to 80% of the time? Guys, and it's not that this trade happens every second of every day. It's going to take a level of patience. But if you focus on this trade, give it your first 30 days with Nexgen. It's going to do something absolutely magical for you. It's going to teach you to read your charts, guys. You're going to be a chart reader. 90% of what you do throughout the day is going to be reading charts. You're going to be able to open up your workspaces, look at those charts, and you're going to understand three very key concepts. You're going to understand where the market is likely to continue. That continuation point is your entry for a high probability trend trade, and I'm going to teach you how to recognize it. You're going to understand where the market is likely to go, and you're going to be able to use Fibonacci and momentum to gauge where that market is likely to go. You'll be able to use that as profit targets. And then finally, and I believe most importantly, you're going to understand where the market is likely to stop, where the trend has the potential to end, where the market has the likelihood to reverse. This is what I call a termination condition. A termination condition does two things for you. It's a giant waving red flag that says, hey, the market may reverse here. No more long trades, no more short trades, no more trading into this key area. But it does one more thing for you guys. These areas where the market is likely to stop, if they do in fact stop the market, if that termination condition reverses the direction of the market, and you catch that high probability trend trade after the termination condition, guys, this is your best of the best. This is your best chance of success. This should be your focus for 20 days, 20 trading days. That's it. That's not a long commitment to keep it simple, but the simplicity is going to have you reading your charts, and your chart reading is what's going to get you into a trade. It's not going to be your desire for a win or your quest for riches. It's going to be three simple rules. And those three simple rules are going to take place on only two charts, guys. And you're going to give yourself the recipe for a trade. A trade is nothing more than momentum, a clear path, and an entry area. Those are the only three conditions that need to be met. You'll be able to identify them probably by the end of this classroom, definitely by the end of the week. And you'll know that they're present by using only two charts. And I'm going to show you why we use two charts real quick, guys. We use a large chart. It's the overall opinion of the market, guys. This is what the deep pockets are doing. These are the guys creating trends and momentum. This is the big group, right? And they're saying, we're going up and we're going that way fast. And there's nothing in our way, and you better get out of the way. That's where we're going to get our the most pertinent information for what we're doing. But then there's always a group that says, you know what, we're not really into what the big crowd's doing. We're going to fight them a little bit. And the small crowd forces a pullback against the large crowd opinion. We're going to take advantage of both of these guys. And we're going to find the highest probability trend trade that gives us momentum, a clear path, and an entry area. And we only need two charts to do it. Remember, simplicity. Guys, I don't know about you, but the more I think about, the more options I give myself. So I'm going to keep it three rules on two charts. My large chart is going to define direction, the overall trend of the market. It's going to identify momentum as well as areas. My large chart is a broad stroke of a brush. It's the overall opinion of the market. And my first two rules, my first two advantages come from this large chart. Rule number one says that I have to have strong trigger lines, which means that I'm going to have the advantage of momentum. Rule number two says that no termination conditions should be present, no areas where the market is likely to stop. Guys, that's your advantage of a clear path. And when I say a clear path, I mean there's nothing between you and your targets. When I have these two advantages, when you have these two advantages, you'll turn your attention to your small chart. Your small chart's going to refine that broad stroke of a brush, guys. What happens in one bar on your large chart is going to happen in 15 to 30 bars on your small chart. One thing you're going to notice is I'm going to show you guys a lot of pictures in this classroom. I'm going to encourage you to steal them. Put them into a spreadsheet, save them to your desktop, whatever you need to do. Guys, when the large chart gives me one bar, it's going to be 15 to 30 bars. This is where that refinement process comes in. You're going to be able to use a limit order to buy or sell a pullback, which is this small retracement counter to the underlying trend. And you're going to be able to do it at a line inside of favorable large triggers, guys. And this is going to reduce your risk. This is going to increase your profit potential. And that's rule number three or three. That's that advantage of an entry area. So, before we go into the rules, guys, I want you to just write it down on a piece of paper. Tell yourself, go tell your spouse, hey, do me a favor, smack me on the back of the head every 30 minutes and remind me to keep it simple. We're going to use 2 charts. We're going to focus on 3 rules that create 3 advantages, guys, and we're going to let our chart reading lead the way. When our chart reading, 90% of what we're doing during the day, says that these advantages are present, we're going to commit wholeheartedly to taking that trade. And as we go through class, I want to remind you guys, I've been where you are. I've been brand new to Nexgen. I have had 0 experience with the indicators. I didn't know anything about futures. That's a great question, David. What's the distance that you should consider to that termination condition? When we talk about termination condition, and you've probably heard me say this before, price is going to reach that area. So let me get through this path real quick. When we talk about, no, see, you're making up rules. When we talk about termination conditions, I'm going to cover that very specifically, and I'm going to show you a couple other things that are going to give you total clarity on it. Sound good? Before I do that, I want to talk about the path, guys. Your path, absolutely, David. And guys, this is what this classroom is for. Ask your questions, I will answer them. There's a step-by-step path to becoming a confident trader. The first one is posting your trades in class, taking pictures of everything that you see. Every time you pull the trigger, every time you think a rule is met, every time you think a rule isn't met. Guys, take a picture right on your chart, put it in Classroom. When you downloaded your software, you were given TechSmith Capture, guys. And TechSmith Capture is a very simple tool. If I click that giant red button and hover over just one chart, it's going to let me take a picture of just one chart, but we're trading with 2 charts. So I want you to take a picture of both. Left click in the upper left-hand corner, drag it down to the bottom right, and release that mouse. When you do, sounds like release the Kraken, it's going to ask you, do you want to take a picture or do you want to take a video? For Classroom, I'd like you to present pictures. For your own personal trading, when you're going to take a trade, guys, this video becomes priceless as you talk yourself through what you see. But for Classroom, we're going to hit capture an image, and it's going to create an image preview, guys, and this is where the magic happens. You're going to use a shape tool to talk about what you see. A lot of you guys recognize those termination conditions. You can use arrows to point out things that you think are important, and if you take a trade, here's the most important thing that you can do for me, guys, is write your rules. Don't make me guess. More importantly, don't make yourself guess. Write the rules that got you in. What did you see? Did you have advantages? Were there problems, right? Get it all on there. I'm spelling horrible this morning. Maybe 2 cups of coffee is too many. This is a weird one. How did you feel? How did you feel about the trade that you took? Were you nervous? Were you excited? Were you anxious? Right? That's going to say a lot about whether or not you knew that you were following your rules. Guys, put all this information on the chart. Let me know what you're looking at, and then click on this upload button. And when you do, you're going to send that picture to the cloud. You're going to put it in the screencast cloud, copy that link, and that link is going to go directly into this classroom, at which point I'll click on it as we get into that second hour. I'll take a look. We'll talk about everything that you see. The next thing that I want you to do with this picture is, guys, Nexgen's provided you a spreadsheet. And this is the second half of that path. The first page of your spreadsheet is every trade that you take. While you're on simulator, you're creating a trade log. You're going through and you're recording everything that you do. So I want you to take that link. I just want you to paste it right into that first page. What kind of trade was it? Well, if you're brand new, I hope it was a trend trade. You'll put the date in so you can gauge your progress, right? How did you feel about that trade? Look at this. I've got options for you. I felt jumpy. Why did I feel jumpy? Well, because I wasn't sure whether or not I was coming from a good top or bottom, and I really didn't know if I had momentum. I don't know if I had that first part. So you're going to go through and you're going to answer these questions, but the most important thing you can do in the notes is write in, was it rules met? Right? Was it rules met or was it rules broken? And what you're going to find is this correlation between how you feel and whether or not you were able to follow the rules. The next thing to do is go to the second page. If it was a rules met trade, put it into your favorite looks, my personal trade setup looks. Guys, this section, the way you receive it in your Nexgen Study Picks folder is about 60 versions of rules-based entries. This is my personal spreadsheet. I steal pictures from the classroom. I put my own personal pictures in it. Every time you guys post a picture, I grab it. If you show me a high probability trend trade, guys, I steal it. But I give you credit for it. As I work on management, there's a section for management. Every great entry has a management opportunity. So you're going to not only annotate your charts for the entries, you're going to begin to annotate your chart for management. You're going to begin to recognize patterns in the market. You're going to be able to recognize these things that repeat themselves every day. Some of them will be used to get you into trades. Some of them are going to be used to keep you out of trades. Every time you recognize a pattern, take a picture, annotate the chart, get it into your patterns. And then termination conditions. Guys, there's a whole section dedicated to termination conditions. This is the Mark Novak section. This was my Achilles heel when I first started, is I traded in the termination conditions like there was somebody paying me to do it. And the reality is it was just the opposite. It kept losing money into these areas likely to stop the market. Eventually, I finally posted my pictures in the room. I got that great feedback from John Novak, who taught the class. And I was putting them in my spreadsheet, so I was seeing that annotation day in and day out. And eventually, I was able to fix that mistake. And that's what you're going to use the spreadsheet for, guys. That first page, don't just create a log. Study the log. Go back. Look at the previous day's trades and what worked for you, right? Let's repeat those patterns that are bringing you success. What didn't work for you? It's just as important because you're going to begin to eliminate those things that are costing you money. What felt easy and kept you relaxed? What felt forced? What made you nervous? Guys, we're talking 5 to 10 minutes tops every morning, maybe even less than that. But a brief historical study each morning is going to prepare you for the day. You're going to go in with that mindset. This worked, I'm going to do it again. This didn't work, I'm going to avoid it. And it's going to accelerate your learning process. I can't stress that enough. I've seen it happen every day. The people that take the most pictures are the people that get to where they want to be. Guys, if I open up my editor, this library is less than 6 months old and it's almost 5,000 pictures. Repetition creates recognition. Recognition, watching these things work day in and day out, creates confidence, it creates trust. That's the path that we're on today, which is why we're keeping it simple. 3 rules, 2 charts, guys. Everything you do, I want to see it in the room. Every question you have, I want to see it in the room. And we're going to start off with rule number 1 because rule number 1 seems like a great place to start, right? Rule number 1 says that I must have strong trigger lines, and I'm going to use those T3 trigger lines to define not only the strength of the market, but also the trend. Here's your first advantage, guys. Your first advantage is understanding which direction the market is going. If the background on your large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trades short. Guys, this is the easiest approach to putting you on the path that I know of. Don't fight the trend. The trend is your friend. Every other cliche that's out there. John Novak had a broker tell him once, he said, "Hey, Mr. Novak, I can guarantee you $1 million in your account by the end of the trading year." It's a pretty simple process, to which, of course, John Novak said, "Heck yeah, why don't you tell me?" He said, "The first thing I need you to do is I need you to fund your account with $3 million and then fight that trend every opportunity you get. You should be down to $1 million by the end of the year." Guys, it's a silly story, but it's a true story. Don't fight the trend, right? It's rarely advantageous. So once those trigger lines define the trend, we're going to use them to define momentum. Rule number 1 says strong triggers. There's 2 parts to your T3 trigger lines. There's your small triggers, which are these solid lines, and there's your large triggers, which are these dashed lines. Your small triggers will break above the large triggers. The large triggers should be wide angled in the direction of the trend. It's the space created between the two that lets me know that the odds are favorable for the market to continue in the direction of the trend. The odds are favorable for the market to continue up, guys. You're going to hear odds favorable momentum. It's a key phrase. This should be the predecessor to everything that you do, having those strong triggers, having that odds favorable, because when you have it, that's the most favorable look for buying that pullback to an area of Fibonacci support. These tails, or these wicks, as a lot of people call them on the 13.2, that is that small chart movement. That's that potential pullback. And your entries as a high probability trend trader are going to happen right at the base of that tail. And I'm going to show you how to pinpoint that after we get through the first two rules. In a downtrend, your small triggers should be below the large triggers. The large triggers should be wide, angled in the direction of the trend. The space created between small and large lets me know that the odds are favorable for the market to continue in the direction of the trend. Once again, there's one of those wicks, one of those tails. You're going to learn how to pinpoint where that tail is supposed to happen, where it has the most likelihood of happening, and you're going to use it for an entry when your triggers are strong to get to that next key area. Commitment to strong triggers, guys, is a huge advantage as you head into your trades. Because when those small triggers work their way back inside of the large, we call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down, guys. And there's two types of triggers that we talk about all day long. There's the triggers with OFM, odds favorable momentum, and those ACH. And it's funny that it's like ACK, because that's about how it is. That anything can happen. It becomes a little bit of a crapshoot. They could go up, right? Or they may go down. So here's your Rule 1 picture, guys. And I'm going to ask the class. I love it when you guys participate. It helps me know that you're pretty comfortable where you're at. Is everybody comfortable with Rule number 1? Odds favorable. Smalls and large are separated. There's a gap between the two. They are wide. They are angled in the direction of the trend. Because when we have that look, the market's likely to continue up. There's one of those tails. Clearly a winner. There's one of those tails. Once again, a winner. And there's odds favorable momentum with no tails, guys. That means that there wasn't an opportunity. This wasn't your money. 90% of what you do during the day is going to be waiting for all of those advantages to come together. I want you to notice anything can happen triggers. Anything can happen triggers right before the reversal in the market. Difficult to take a trend trade if the trend is changing. And then sometimes those trigger lines just won't even work together, guys. The small may be up, the large may be down, the background might say up, but your trigger lines are pointing down. This is when the market's trying to figure out what it's going to do, and this is where you guys have the advantage of Rule number 1. It'll keep you out of the market in times like this. It'll keep you from predicting, because predictions, I've found, rarely work. Same thing as forming an opinion, and opinions are very costly in the trading world, guys. Let them sort themselves out. Wait for those advantages. Look for them to be present. So that's Rule number 1. You now have the advantage of momentum. Once you have the advantage of momentum, it's time to look for the advantage of a clear path. So once again, straight from the tutorial section, Fibonacci tops and bottoms, guys. What is a termination condition? Well, it's a Fibonacci-based indicator that may reverse the market. Those areas can be a divergence high line or a divergence low line. These are the magenta or the cyan lines that print from a pivot where the market is losing momentum. Your software does all the calculations in the background. You don't have to measure. You don't have to compare. You just have to know that when this cyan line prints from a pivot, when the market goes from down to up, momentum is not following price. The same is true from a high. This divergence line prints when momentum is no longer following price. I'm going to teach you how to use these divergence highs and lows to understand if that's an area where the market is likely to stop, has the potential to reverse. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1 dots. Guys, it's a simple process of understanding whether or not the market is likely to stop, to reverse, to bounce, to react adversely. And it's a two-part process. And David, this is where we're going to get into your answer. How far is far enough? How close is close enough? Guys, two things have to happen to understand a termination condition. The first is price reaches an area. That's it. These dynamic Renko bars come down. They connect with support. And you'll see it sometimes. They'll hit support. They'll begin to break through. But the only thing we're using these price bars for is price reaches the area. When price reaches the area, your job as a brand new trader is to ask yourself, where are the triggers? If support is reached and the trigger lines remain above, no more short trades into that area. This is an area that's likely to stop the market. It's likely to create a reaction that's untradeable. It may even reverse the market. And you're going to see this happen all day long. Price is going to come down. Here you can see it begins to exceed that area. And there's one of those losses of momentum. Divergence creates the cyan line to the right. Guys, this is not a termination condition. This is a pivot with a loss of momentum. When price reaches that divergence low and the trigger lines remain above, now I have a termination condition. This termination condition is called a pivot stop out. There's your pivot. There's your stop out. Trigger lines remain above. Guys, when that market reverses from a termination condition, we're going to call that a strong bottom. We're going to call that a good bottom. That's that area likely to stop the market that reverses it. And then your high probability trend trade that happens after that is your highest probability trade ever. Same thing from a high. Price reaches resistance. It loses momentum. All the trigger lines remain below that area of resistance. No more long trades, guys. I've got to sit on my hands. I don't have a clear path. Ultimately, the market pushes all the way down to support, almost to that mid-band. All of the trigger lines remain above. I can't go short. I can't go short. I can't go long, guys. Some of you are going to get frustrated at this point. You're going to say to yourself, oh my gosh, how on earth am I going to make money if I can do nothing? Well, you're going to remind yourself that 90% of what you do throughout the day is sitting on your hands, reading your indicators, reading your charts, waiting for advantages. Price pushes all the way back up to two forms of resistance, two Fibonacci resistance lines, as well as that divergence high. All of your trigger lines remain below. Now we have one of those pivot stop outs of a divergence high, and we have two areas of resistance, and all of our trigger lines are below. Definitely no long trades, but when this termination condition creates the full reversal, I now have what I call a strong top, and this is the precursor for the absolute best of the best trade that you can take. Strong tops and bottoms are the path to your best trades. Even with odds favorable momentum, this market reaches yellow 1-to-1 dots. When price reaches the area, David, are we answering your question with this formula? Price reaches the area. Where are the triggers? The trigger lines remain above. No more short trades, right? Keeps us safe. Look how the market reacts. When this termination condition creates a full reversal, large triggers go from red to green, smalls above. And this full reversal gives me a clear path and odds favorable. Guys, there's another one of those tails. That's the trade you're going to commit yourself to never missing. So I'm going to give you guys a couple examples real quick, a couple pictures to put in. Here are termination conditions at a high. Steal these pictures. David, it even has the recipe on it. Price reaches an area, triggers remain below. Guys, that's how we define a termination condition at a high. There's one of those pivots, right? Not a termination condition, just a loss of momentum. But when price reaches that pivot, trigger lines remain below. Now it's a termination condition. And this termination condition creates a full reversal. Looking for that potential high probability trend trade. This is a strong top. Price reaches resistance. Absolutely no trigger lines break through. No more long trades, even with odds favorable momentum. It hasn't created a full reversal yet, so it's just a termination condition, not a strong top. And then there's price reaching 1-to-1s and resistance. Trigger lines remain below. You can see that from this termination condition, it pushes all the way down to support. pushes all the way down to a second level of support, and the trigger lines don't follow. They remain above. Guys, there's another one of those 90%. Termination condition above into a termination condition below. And here's your lows. Same recipe. Price reaches the area. Where are the trigger lines? Well, price reach 1-to-1s. Everything remains above. This is a termination condition. When this termination condition creates a full reversal, we now have a strong bottom. We now have a good bottom. This is the precursor for that highest probability trend trade. There's one of those tails. Price reaches support. Absolutely no trigger lines break. This termination condition creates a full reversal. Full reversal provides odds favorable. Once again, look at that tail. A potential entry to get you into that highest probability trend trade. And then here's one of those pivots. The pivot ultimately becomes a termination condition when price reaches it and the trigger lines remain above. This termination condition creates a full reversal, waiting for the rules to be met for a high probability trend trade. Guys, this is the easiest recipe in the world. Price reaches, where are your triggers? And if you let it be twofold, if price reaches the area, absolutely no triggers break through. The area is not broken. It may reverse. No more long trades. You don't have a clear path. Well, when do you have a clear path? When the small and the large get to the other side of resistance, guys. Price reaches resistance, sit on your hands. It's either going to break or it's going to roll. When both the small and the large triggers get north of resistance, south of support, now we consider the area to be broken. Now you have a clear path. Now you're looking for that highest probability trend trade. And there's one of those potential entries. So I'm going to ask you guys in the room. I know you're a little bit shy. Oh my gosh, what if you give me the wrong answer? Is everybody cool with this? Price reaches, no triggers, no trade. Small and large get through the area. We now consider it broken. And then David, I've got one more for you that I think is going to be really helpful. Thank you, Tan. And I've got a slide in my spreadsheet that I call termination or target, determining whether or not it's a termination or a target, guys. If price reaches the area and none of the triggers break, it's textbook. It's a termination, no more trades. But if you're looking at a fib off in the distance, if you're looking at 1-to-1s off in the distance, that becomes a target, guys. You're going to use momentum and Fibonacci to gauge where the market is likely to go. That's where your target comes into place. So the same fib may be either. It might be a termination condition initially. Later in the day, it may ultimately be a target. But if you keep the recipe simple, price reaches, no triggers, it's going to keep you on the right side of things, guys. Sometimes the market will turn and there's no Fibonacci there. Sometimes you'll get a reversal from a low, even though you have a clear path. Sometimes you'll get a reversal from a high, even though you have odds favorable and nothing in the way. Guys, these aren't termination conditions. These are just pivots. But you can use a small chart to see this potential change happening. And guys, this is the only termination condition that I give any credit on a small chart, and it's 3 divergences in the same location. 3 losses of momentum in the same price range. It may reverse the trend. You'll see it print, negative number, cyan line from a low. When it happens 3 times, that market may push up. Same thing from a top. You see that magenta line, that negative number happens 3 times, that market may push down. Quick note, this negative number means nothing. You either have divergence or you don't. It's just a byproduct of the calculations being run in the background. 31% is no more weaker than 61, right? 69% isn't stronger than 61. It's simply a loss of momentum. Guys, these 3 losses of momentum become more powerful when your small triggers work their way inside of the large triggers. When your small chart has anything can happen triggers. You can gauge momentum slowing faster than you'll see it on a large chart. And when your third divergence is higher than the previous pivot or lower from a high, now you have that head and shoulders pattern. Price couldn't exceed, couldn't reach the previous pivot, and you're losing momentum. It adds fuel to the fire. You're going to see this look on a low or this look on a high at times when your large chart seems to be turning from nowhere, guys. Not only are you going to be able to exit trades that you're in, perhaps you're losing that momentum, preserving capital, it's also going to help you manage trades and other ways as you get a little further along in the process, guys. You'll be able to use these divergences to recognize advantages going away, whether you're in a trade already or whether you're wondering if it's time to take a trade. So large chart is going to give you the comparison areas and trigger lines. Small chart will give you those multiple divergences, guys. When those three divergences happen on a higher time frame, especially around Fibonacci, you can expect larger moves. The patterns that I teach happen on every chart, every time frame. We're going to simplify it down to 2 charts, but all the patterns are the same, guys. So David, did that help a little bit? The difference between a target and a termination? Awesome. Thank you for asking that question, because there's probably 10 other people in here wondering the exact same thing. So where are we at in advantages? We have odds favorable momentum, which means that we have strong triggers, which means that you have the advantage of momentum. Termination conditions are false. We haven't reached any areas that are likely to stop the market. Therefore, there are room to profit targets using Fibonacci, which means that I have a clear path. All I need to do now is turn my attention to a smaller, faster chart, and let's find that spot where the market is likely to continue. I'm going to use a limit order to buy or sell a pullback. And a pullback is nothing more than a small retracement in price that's counter to the underlying trend. If everything says up, I'm going to buy that market while it's coming down on that smaller, faster chart. And if everything says down, I'm going to sell that market as it's coming up on a smaller, faster chart. I'm going to buy or sell a pullback, but it's going to be at an area inside of favorable large triggers. And that's such a key point. Inside of favorable large triggers. And that's where the success happens, guys. That's your entry area. Good morning, Debbie. That's that spot where the market is most likely to continue. So let's kill a couple pictures and let's go to the entry rules. And I guess before we talk about finding that area, let's talk about favorable large triggers, guys. It's a very definite look. Favorable large triggers means that your large triggers and your synthetic triggers on the smaller, faster chart are overlapping, one on top of the other, no space between the two. Your large triggers, the smooth, large dash triggers, are native to the 5-1. Your synthetic triggers got that name synthetic because these are synthetically pulled from your 13-2, from your large chart. It's just the large chart large triggers and the small chart large triggers working harmoniously in symphony, creating one trigger line almost, overlapping, guys. When you have this look, your window of opportunity is going to be its absolutely smallest. That area where the market is likely to continue is very consolidated. This allows you to reduce risk dramatically. I'm going to give you this picture, and that should be where you're looking for those areas. Those areas can be fibs, mid-bands, or one-to-ones. They have to be inside of favorable large triggers. But we have to get a pullback first, right? When the rules are met on the 13-2, everything is up, the strength is there, momentum is there, the path is clear. Your 5-1 should be mimicking. You should have strong triggers on the 5-1. Smalls above the large, large wide, angled in the direction of the trend. Guys, flat triggers lack momentum. Your large and your synthetic should begin to overlap one on top of the other. And they're like a shark about to breach in a long trend. Guys, they're coming up as the market's coming up. As the market pulls back, they're going to continue coming up. They're going to swallow these areas that may be inside it. Great question. So, Tanver, synthetic just means from a different time frame. That is the easiest definition I can give you. So if I look at, and I'll take a picture, we'll do some arrows just so that you're comfortable with the concept. If I look at this picture right here, the smoother trigger lines, let me use my call out button. The smooth triggers are from the smaller chart. They're being developed and they're native to that smaller chart. And then right here, the stepped triggers, whoops, wrong one. The step triggers are from the large chart. They are synthetically added to the smaller time frame. Let's see, I think that makes sense. So when you see the stepped triggers, these are just the 13.2. These are the large chart triggers. We call anything that is from a different chart synthetic. You're going to see it with Fibonacci as well. And I think that this is a great question just to understand the terminology. And let me find my picture for you real quick. So when you look at Fibonacci areas, the same thing is true. When you're looking at a higher time frame, you'll see skinny Fibonacci areas. These are synthetically brought over from the 5-1. You'll see very fat Fibonacci areas. These are pulled over from the 21. We call these our synthetic fibs. But the Fibonacci areas that extend all the way to the right, these are native to the chart. These are the 13.2 Fibonacci areas. Does that make sense? And guys, I'll give you this picture because this is a good one. But we use these combinations on other time frames because they've been proven through an awful lot of study to create an advantage. So when those two trigger lines, large and synthetic, work together, then they're overlapping, I know that my window of opportunity has the potential to be its absolute smallest, which reduces risk, which makes it easier to keep me in the game if I incur one of those losses that are going to happen during the day. But with everything up, my rules say that I'm going to buy or sell a pullback to an area inside of favorable large triggers. My areas are fibs, mid-band, or one-to-ones, any combination. Sometimes they're one on top of the other. Sometimes they're spread out a little bit. But I need that pullback. And that pullback begins with a reversal bar. With all of these bars going up, with those strong triggers, with the large triggers, everything says up, guys. I want that market to push against the overall trend. I want the market to fight the overall momentum. This reversal bar signals the beginning of a pullback, that small retracement counter to the underlying trend. When I get this reversal bar, I'm going to create a window of opportunity. And my window of opportunity is going to extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. These large triggers are coming up, they're strong, they're a tick or two below, but they will envelop them before they get there. My job, your job, as a rules-based trader, because you've defined momentum, you've defined a clear path, and now you've defined the area where the market is likely to continue from that highest point to the lowest point inside of favorable large triggers, you're simply going to right-click on the chart and you're going to activate a limit order. Buy 2, buy 1, buy 100, whatever it is that you're trading. And then your only job in the moment is to wait. And the market's either going to come to you or it's not. Remember, this is a smaller, faster chart, and there's going to be fluctuations. That market may come down and then dance up and then go back down and then dance up. Your job is to enter the market at the area where it's most likely to continue, and that's that highest point of support inside of favorable large triggers. If the market comes back to that 79.21 mid-band, you're probably in at 21.22. You have the advantage of momentum, you have the advantage of a clear path, and you also have the advantage of having pinpointed with amazing accuracy that area where the market is likely to continue. Your protective stop is going to go down here below that window of opportunity, below that point where the market is most likely to continue. Because if the market exceeds that window, we don't want to be in that trade anymore, right? We've lost the advantage of an entry. This is where I remind people, guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. I'm not going to sit here in this classroom and tell you that you'll have 100% winners. That's not realistic. Taking losers, small losers, are a normal part of a positive equity curve, guys. Every 10 trades you take, 2 or 3 are going to hit that stop. That's why we trade with protective stops. We know where the market shouldn't go. Our methodology is sound. Our rules are amazing. And if it exceeds, we don't want to be in that trade anymore because we trade advantages. That's what our rules provide. But this is a trade that I'll never miss. I'll take this trade 1,000 out of 1,000 times when these conditions are met because 70 to 80% of the time, this is what I'm doing, guys. Profit target reached. Entering the trade with the advantage of momentum without termination conditions present. Entering that trade from the area inside of favorable large triggers. Because I wait for the pullback, my risk is reduced dramatically. My stop's going to go below that reversal bar when it begins moving in the direction of my trade. I see users in this room all the time showing me 2-3 ticks of risk on high probability trend trades. Because I wait for the pullback, my profit potential increases exponentially. Guys, this is your trade. This is your highest probability trend trade. This is the trade that you should focus on for your first 20 days. This is the trade that is going to teach you to read your charts, that wins more than it loses, the trade that's going to create confidence through the memory of success. And you guys are going to fight simplicity as much as you can. I'm going to encourage you to embrace it. Remember I said we don't trade the tails, right? Now that we've talked about entries, you can see that we trade pullbacks to areas inside of favorable large triggers. But we can pinpoint, nice trade, Jerry. We can pinpoint where that tail is most likely to form, to bottom out, by using those areas inside of favorable large triggers, guys. I'm going to give you this picture. This is how you study. Guys, if you don't take any time to study this trade, you're going to hesitate. When the rules are met, you're going to hesitate and you're going to talk yourself out of things. Odds favorable momentum on the large chart, right? Smalls above. No termination conditions. David, can we compound a little bit on your question about how close is close enough? Because to determine the termination condition, price reaches, right? Sometimes price doesn't reach. And David, right here, I've only got 8 ticks until I get to that potential trouble spot. That doesn't feel like enough, does it? 8 ticks. Why on earth would I take a trade if there's only 8 ticks? And this is where I remind you guys that we're not trading from the top of this bar. We're trading a pullback, and this is your pullback. And we're getting in at 86, which means the reality is there's about 28 ticks of potential profit. Guys, this is one of the reasons that we trade those pullbacks. So David, this helps new users a lot. They're going to say, but I'm only 4 ticks off, Mark, there's no room. But remember, you're probably taking a 15 or 20 tick pullback and entering at the bottom of that pullback at the areas inside of favorable large triggers. So this magenta line is a target. It's not a termination condition. Another thing new users are going to say is, but Mark, my small triggers turned against me. Remember that momentum is gauged on a large chart, guys. Momentum is defined on a large chart. Without this little loss of momentum, the likelihood of getting that pullback to the best of the best area goes down. But Mark, there's a 1-to-1 right here. Termination conditions happen on the large chart. This 1-to-1 has given me just enough bounce to get me back to that area inside of favorable large triggers, guys. These are things that you're going to work through as you work through your entries. You're going to see these fluctuations before your limit order is hit, and I'm going to see a lot of you guys getting in at the top of this bar. That fear of missing out, right? That fear of missing out. FOMO, is everybody familiar with that term? The fear of missing out. Let's go to the glossary of common terms, because I heard something yesterday I want to share with you guys. The fear of missing out can cause investors to make riskier choices than they might otherwise make. This includes getting in early with a much larger stop that's warranted, which does not guarantee a win, guys, only a bigger loss if it loses, or getting in late without the proper advantages. Guys, if you jump in because of the fluctuations, Your stop still has to go where the market shouldn't, right? You have increased your risk dramatically. Good morning, Safia. Because you've gotten in at the top, you have decreased your profit potential dramatically, guys. You're killing the recipe, right? So we're waiting for that. I heard a phrase yesterday, the joy of missing out, JOMO. Has anyone ever heard that? It's probably made up. What's the joy of missing out? The joy of missing out says that you're cool if you don't get in, if it goes without you, because your rules aren't met. And when you skip this, oh my gosh, entry, and you keep your entry in place, there's joy because now your risk is reduced, right? Because now your profit potential is increased. I thought that was pretty brilliant, the joy of missing out. Because guys, when we miss out, it means that our rules aren't met. It means that the advantages weren't present. It means that we no longer were looking at a trade that had a chance of winning more than it's lose. So you're going to use those tails as a study tool. And we're going to go to the live market right now. They're killing the NASDAQ. And we're going to take a look, guys. Odds favorable momentum. Haven't reached that area. It's a target, not a termination. I want to see what that circle looked like. Looked exactly like a pullback to an area of resistance inside of favorable large triggers. Guys, you've been very reluctant to share your whys today. Can you do me a favor? Give me a why in the room if you see it. Even more so, give me a why in the room if you see how you can use a checklist to get you comfortable with what you're looking at. Guys, this is it. This is the keys to the kingdom. You can either believe it or not, but if you go back and study it, it's virtually impossible to not be a part of this. Let's scroll back and look. I'm using NASDAQ because it moves all the time. And let's simplify even more just to recognize patterns. Let's do nothing but trigger lines. And you know what, Vin? I agree with you 100%. And Vin, I think that that's brilliant. Why? Because you're recognizing that price reached an area and the trigger lines didn't break, right? I had someone send me a message the other day and he said, you know, in one of the videos it said that experienced traders might take this trade. Guys, there's no reason to trade into it. But the hardest part is realizing that the market may go without you. So then you begin to gauge, this is a termination condition that creates a full reversal. This full reversal gives me odds favorable momentum. Let's see what it looked like. Guys, I don't want you to break your rules. I want you to focus on the best entries. This isn't it, is it? This is directly into a termination condition. Is everybody okay to miss this trade? I would be. I would never take this trade. This doesn't fit my plan. My plan says don't take it. Some people will take it and they'll do all right with it. But Vin, I'm with you. You don't need it. You don't need to trade into termination conditions to be successful. You don't need to trade with anything can happen triggers to be successful. There's the S&P, guys. That's what it looks like if you squish it a little bit. Pivot stop out, straight to a divergence high, pivot stop out, straight to resistance, right back to support. Guys, this is a market that's consolidating. This is a market that can't figure out which direction it wants to go. You don't have rules met because of rule number 2, which means you're not getting chewed up. Crude oil, holy smokes. Give it a day, guys, and then we'll go fill our cars, right? Oh my goodness. Just waiting for advantages, strolling back, looking for those looks, giving yourself the best of the best. Are there any questions about the 3 concepts, guys? Are there any questions about odds favorable momentum? Are there any questions about termination conditions? Are there any questions about locating an entry? Guys, your job for the first 30 days is to study this look, to go back, look at it historically, to go back and find those looks when you have odds favorable momentum, when there are no termination conditions, and just circle the tail. And if that tail lines up at an area inside of favorable large triggers, well, then you have your best of the best, guys. If you spend your time focusing on the window of opportunity, learning how to recognize the best of the best area, guys, great entries create manageable trades. Great entries will create manageable trades. I can't say that enough or loud enough. Great entries make it easy to make profit, guys. Reversal bar prints from the highest point of support to the lowest point of support. Teaching your brain to ignore the areas outside of the window of opportunity. Teaching your brain to ignore one divergence on a small chart because it doesn't matter. It's not a part of your rules. One of the things that you're going to try to do is add rules. Will this fib turn blue, or that fib turn red, or this midband was this color, or that wasn't the right color? Guys, I'm going to give you a checklist. Is the market coming from a good top or bottom? Was it a termination condition that created a full reversal? If the answer is yes, go to the next one. Did you have odds favorable, large trigger momentum on both charts? If the answer is yes, you're looking for termination conditions. If there were none, if it's a yes, did you have an area inside of favorable large triggers? And once again, guys, if you hit 4 yeses, you have found a trade that typically wins 70 to 80% of the time. If the market is not coming from a good top or bottom, but the other 3 advantages are in place, you still have an amazing trade. I'm going to give you guys this checklist. Print it out, put it on your desk. Every time you take a trade, make sure that you're following it. Train your brain to follow rules. For those of you that are a bit more visual, I created this exact same document. It's the exact same rules, the exact same checklist, but I stole pictures from the resource materials. Keep this on your desktop. Click on it every morning. Study it. What am I looking for? I'm looking for a termination condition that creates a full reversal. And when I get it, I'm going to make sure that I have odds favorable momentum. And it's going to look like this, not like this. And then I'm going to make sure that my path is clear. And once it is, I'm going to commit to that window of opportunity to get into the trade. Guys, this checklist will save your bacon. This checklist will keep you on the right side of everything, because when this checklist is true, all of your charts agree. Everything will stay up. Everything will be its strongest. Everything is working towards your success. And I'm going to give you one more gift. And guys, this is a simple plan for consistency. Every trader should have a plan. And your plan should define exactly what it's going to take to get you in the market. And your plan should define exactly what it's going to take to get you out of the market. So that there is no room for emotion. There is no room for opinion. Very pragmatic, very mechanical, guys. My trade is the high probability trend trade. And these are the conditions that must be met for me to take a trade. Notice at the top it says never fight the 13-2 direction. Never trade against the trend. Never fight those trigger lines, guys. You're rarely going to win. The large crowd says up. That market's probably going up. Then you're going to have to manage a trade. So a mechanical approach that eliminates, I'm going to zoom in a little bit here. Define your management plan after you define your entry. Guys, we've defined the entry. How do I manage it? Well, in the beginning, I don't have the skill set to really manage a trade. I'm still learning to read my charts. I'm brand new. So I'm going to keep it mechanical. It's going to eliminate emotion or opinion. It's going to be the most straightforward approach for me. You can alter your plan when you're done with the education, guys. But if you trade 2 contracts, your initial stop should be 12 ticks. And then that allows you to move it outside of that window of opportunity. Here's your perfect entry. Here's your initial stop. Your first 2 targets will be 100 and 200. Guys, at this point, there's nothing to do. You've entered the market. You either get stopped out where the market shouldn't go, or that market is going to give you the reversal bar. And if a reversal bar prints in the direction of your trade, you're going to reduce your risk. Come on, picture. It's going to mess with me today. You're going to reduce your risk above the reversal bar, and I'm not sure why that picture has decided not to work. So I'm going to cheat because I have that same management plan on my spreadsheet. The reversal bar prints. There's my entry. My risk is reduced and nothing for me to do, guys. Pragmatic, emotionless. It either hits my first target or it stops me out for a small loss. I'm not in control of which one it happens, but my hands are in the air. I'm waving them next to my face, letting the sweat from my palms dry because I'm a brand new user. And I'm waiting to see what happens. If my first target gets hit at $100, why $100? Because it's easy to hit if all the rules are met. Because that quick success breeds confidence. Because that's $100 that they can't take from you. And now you're break even on the trade, guys. And either your second target gets hit or your stop gets hit. You're out break even. And let me tell you that if you're taking a $100 trade, it doesn't feel like much, right? But what if you have 3 trades that don't make it every day? And that's the only trades you take. That's a $300 day, which still doesn't seem like a lot of money to most of us. But $1,500 a week, well, yeah, I could do something with that. That's going to pay for my Corvette. But that $1,500 a week, guys, that's a $6,000 month, which puts you at a $72,000 year from 3 trades that only hit that first target. But the reality is, with all those advantages in place, that $200 target is likely. And now it's a $300 trade. And guys, if you win 3 of these, let's say you take 5 trades, right? You win 3, and you're up $900 on the day, right? But anything that wins has to lose. But because your management, where the market shouldn't go, you're taking smaller losers. Let's say you lose 200 per, right? And now you're at 500 a day. 250 per contract, guys. That's a very reasonable, that's a very conservative goal. That's a $2,500 week, guys. That's a $10,000 month, which puts you at $120,000 a year from the highest probability. The reason I go through these numbers is it's not the winners that are creating success, guys. It is the advantages. It's the process. The process yields results. Being committed to having the advantages puts you in a position to win more than you lose. My goal every day, all I do is I remind you guys that in order to get to where you want to be, post your trades in class. Use that spreadsheet. Start taking pictures. Create confidence through the memory of success. Recognition through repetition. You have to learn the trigger line of Fibonacci rules for when it's okay to trade, guys. That's my job. Every morning I'm going to talk about the rules. The first hour every day is mind-numbingly repetitive because these rules work, and I want you to believe in them wholeheartedly. You're only going to believe in them if you study them, if you backtest them, guys. Be spiteful. Prove me wrong. Triple dog dare you. Go back and study these looks on charts and tell me they don't work. Show me pictures. Show me your homework. Simulate your trades daily, guys. There's no risk of loss of capital on a simulator. Monopoly money. Don't practice the wrong trades, though, because it's monopoly money. You're building muscle memory. You're not going to be able to buy a simulated Lamborghini or a simulated mansion. You're not going to have a simulated girlfriend that thinks you're neat because of all your pretend money. So practice the correct rules. Get yourself in the habit of believing and trusting. Simplify. One trade to get going, guys. One trade, high probability trend trade. Commit to 20 days and learn to read your charts. From there, you're going to branch out. Guys, when you're so good at the high probability trend trade, you're going to work your way into a medium probability trade. I'm going to help you do it. And this is when most of your indicators line up for a trade. However, a small issue exists. Your ability to read your charts is going to have you identifying that small issue. These trades have to be taken assertively, guys. Which means that you need to be able to recognize 3 divergences on a small chart to get you out of a medium probability trade that isn't working. You have to be able to identify trouble spots. Your chart reading, once again, is going to have you identifying those trouble spots. and get to a zero loss level, guys. That's the way to handle a medium probability trade. And then you're going to go back on market replay and you're going to replay the day. And you're going to fix your mistakes, guys. You're going to get 2 days worth of experience every day because market replay allows you to go back and do it again. Take as many pictures as you can. Bring them to class the next day. Let's talk about all of them. And repeat this process every day until you always take the correct trades. Because if you always take the correct trades, guys, you're taking a trade that wins more than it loses. And you're guaranteeing yourself that you can win. And that's when you try the live money, right? But now you don't even have to risk 10 grand of your money. As now you can use a funding firm like Apex. And these guys will evaluate you. They'll give you 25, 50, 75, 150, 250. You're going to give them a monthly fee to control that amount of money. But if you pass, if you test your trading plan and you really are winning more than you're losing, and you really are reacting rules-based rather than emotional-based, and you're preserving capital, guys, they're going to give you the 25 grand to trade, their money. But you're going to have to stay that path. You're going to have to be consistent. A lot of people do the 50,000, right? You have to make 3 grand before you lose 2,500. This is probably the best bang for the buck, in my opinion. A lot of you are going to get excited. Oh my gosh, I can control $300,000, $250,000. Guys, if you can't pass it on 50, what makes you think you're going to pass it on 250, right? You're just testing your reaction to the live market, making sure that you can follow your rules. But the cool thing is once you do pass it, once you are comfortable, you can take that same $50,000. Guys, it cost me $36 a month to control 50 grand. You can take that same $50,000 account and get 20 of them. And now you're controlling $1 million, right? And now you're controlling that $1 million for about $500 a month. You get to keep the first 25 grand. You get to keep 90% of everything you make, and you're doing it because you're pragmatic, because you're calculated, because you're taking trades that win more than they lose. So that's your path. My job is to teach you the rules. Your job is to practice them. And then we meet in the middle in this classroom and we talk about anything and everything that you did. No reason to blow out accounts anymore, guys. None whatsoever. Any questions? That's our first hour, guys. We're going to get into the second hour. We're going to go through and we're going to talk about what's happening in the live market, right? We're going to talk about what you guys see, what you're doing. Going to talk about the advantages, the disadvantages. John Novak's going to come in the room and he's going to post a little bit. He's going to say, that's a termination condition. When price reaches an area of support, when all the trigger lines remain above, he's going to look for a potential entry. Doesn't really fit any of the rules that we talk about in this room. But because he's a chart reader, because he's recognizing patterns, because he's using that termination condition as the precursor for the best of the best trades, he has an opportunity to get into the market, get out of the market. John Novak, it's a beautiful trade. It's not a high probability trend trade. I can't put my checklist on it. But I also don't have 27 years of chart reading under my belt, right? So I'm going to start small. I'm going to start simple. And I'm going to make sure that my chart reading leads the way, right? Look at these 3 divergences in the same location, coupled with a termination condition. The larger up, the smaller up, all charts are green. Guys, every indicator on every chart agrees. The only thing that John Novak is fighting here is that red background. But he's taken the first and the best shot from a termination condition. I love this trade. This is a beautiful trade. You don't have to take this trade to be successful. You have to learn to read your charts. And then once you learn to read your charts, that trade's probably just going to work its way right in. All right, guys, I'm going to take a break. Termination, then trade. Absolutely. Termination, then trade. I told the class, John, I said, this is going to be the precursor for your most successful trades when they come from a termination condition that reverses the market. You're just doing a good job. validating that claim. Thank you for that. Guys, John Novak is the CEO. John Novak wrote the software. He has been Nexgen, along with Melinda, for the last 27 years. He jumps in this room, he talks to you, he'll give you his 2 cents on everything. It's pretty awesome that he does that. Guys, I'm going to take 5 minutes. When I come back, we're going to look at the charts that you guys posted. We're going to answer the questions that you guys have. And we're going to scroll through and we're going to look through the live market and look for opportunities, look for advantages, looking for odds favorable momentum. And John reminds us, you will make mistakes sometimes. What you do next is the key. I like that. I'll be back in 5 minutes, guys. Mic silence. All right, y'all, here we go. Second hour. And I left this up because I think this is a pretty key point, and I want you guys to see this. This is not a termination condition. This is nothing more than a pivot that's coming from the middle of nowhere. It has a loss of momentum, and it creates that odds favorable momentum. It changes that trend. Well, as it comes up to the top here, price reaches resistance, and the trigger lines remain below, and then the small trigger lines break above the area, but the large triggers remain below. You'll notice that the large triggers never break that area. We never get what we consider a clear path to the upside. This is going to be your first medium probability trade. For you guys, as you break outside of the high probability trend trade, this is a look that happens all day, every day. And honestly, on medium probability trades, these are going to be the majority of your trades. So what you have is what we call a 50-50 look. And this 50-50 look has zero to do with whether or not you have a chance for success. This 50-50 look means 50% of your trigger lines have broken through the area with odds favorable momentum, but 50% of your trigger lines have remained below. When you have this look, this 6980 area has not broken. Because it has not broken, you do not have a clear path. Guys, how you take 50-50 trades is going to have an awful lot to do with whether or not you're successful on this trade. This area has the potential to break because of the momentum, but it hasn't broken yet. The clear path isn't there. So when I look at the advantages, right? If I go back to that simple recipe for a trade, I need momentum, a clear path, and an entry area. A 50-50 trade eliminates a clear path from the equation, guys, which means that I shouldn't sacrifice momentum, and I certainly shouldn't sacrifice an area to trade from. Because a medium probability trade means that a small issue exists. One issue exists, singular. So when I have this 50-50 trade, when I have that area with the potential to break, it's imperative that my entry on the smaller, faster chart is perfect. My money is worth a perfect entry. No divergence means that I'm not giving up momentum, right? I'm maintaining that advantage of odds favorable. A small window of opportunity means that I can tighten that risk and keep it smaller because it's not a high probability trade. In these strong triggers, smalls outside of the large mirrors that momentum and lets me know that that momentum is still present. Guys, this is one of the best looks that you can have for a 50-50 trade. Hey, good morning. Absolutely, Jay Solar. In order for the path to be clear, both the small and the large have to get through it. So here, even to this low, we see that the smalls break, the large do not. And ultimately, this 43 area holds, doesn't it? Provides an odds favorable momentum to the upside, maybe an opportunity for a long trade over here. The area is not broken. The area has the potential to break. And then the area is broken. Medium probability trade, guys, is going to take away one of your advantages. It's either going to take away the advantage of momentum. It's either going to take away the advantage of a clear path, or it's going to take away the advantage of an area inside of favorable large triggers. When the advantage that's gone is that clear path, insist on the best of the best. Insist on no divergence. Insist on strong triggers. Insist on a small window of opportunity, guys. This is your best chance of success on the 50-50. I can't stress this enough. I scream it from the mountaintops. One of the most common trades lost that I see in this room are people taking 50-50s where they give up the advantage of a clear path, and then they give up the advantage of momentum by letting divergence print. Or they take it when there's a huge window of opportunity, which means that their risk is exponential on such a medium probability trade. Guys, let it be perfect, right? And then one more way you can compound that best of the best is making sure that your that your medium probability trade is coming from a termination condition, that has created a full reversal. That gives you the best chance of success on a 50-50. And I'm going to leave this for you right here, guys. That's that strong bottom, strong top. That's the one that gives you the best chance for a 50-50. Is everybody comfortable with that? So let's go through and let's see what this one looked like. What were the conditions on the 50-50? If I circle the tail. I did have divergence. A lot of you won't take this trade because of the divergence. That's okay. But there was a small window of opportunity. There was extremely strong triggers. Your path as you grow with the software is going to change. This may be a trade that a lot of you will take in the future. In the beginning, when you're brand new, right? When you're looking for the best of the best, when your only focus is to be successful. I'm going to look one more time, guys. That super simple trading plan that I put in the room earlier has a 50-50 trade on it. This is your second trade typically. I've given you a checklist for it. You have to have odds favorable on both charts. There should be no divergences on the 5-1, and it should be coming from a good top or bottom, a termination condition that creates a full reversal. This right here is your highest advantage. You're going to get it at the area. If divergence prints, there's no trade. Because it's a medium probability trade, you're going to have to manage it assertively. So there's a different management plan, right? You're going to identify the problems, divergence prints, it changes it. So guys, this is on your KISS trading plan too. A lot of you can't sit on your hands long enough. This gives you an opportunity to look for the absolute best of the best, as well as the first shot at a medium probability trade. Are these regularly newly formed divergences or the tails from old divergences? I've never or very seldom seen the tail of a divergence stop the market. Can you please? Absolutely. Let's talk termination conditions. Jay Solar, so let's do this first. Crude's kind of been straight lining. I'm going to go to the S&P and open up my chart. You say that you seldom see it, right? There's a divergence low. Stop the market. Once again, once again, once again, once again. So there's 6 examples. And I know this because it happens a lot. I remember seeing this earlier, and that's how I knew. There's a 50-50 on a divergence low. There's a 50-50 on a divergence low, right? There's one of those pivot stop outs. No triggers comes through. There's a 50-50 on a divergence low. There's another pivot stop out where the smalls didn't come through. It actually happens quite a bit, so much that it made its way into our termination conditions section. But let me show you a slide that I made for somebody. And I like this question a lot, Jay. I don't know what a divergence tail is. What's a divergence tail? Let me go back to your picture. Divergence has nothing to do with the tail. And maybe this is where the challenge is coming through. Divergence, and let's go back to the picture. This tail, this divergence doesn't print, Jay, until about 3 bars in. So the calculation for this divergence is true right about this bar right here. Does that make sense? So it has nothing to do with the tails. It has everything to do with the market coming down, losing momentum, and right about here is where the equation is true to make that negative number print. And let's see if we can find an example on the live chart right now. This is your 5-1. So right now I have divergence potential, right? If it's a bar, the tail's going to form. Let's see if we can get a few bars up for the sake of class. Come on, S&P. If the bar forms, I'll get a reversal bar. There we go. Divergence didn't print until the third bar. But there's one of those pivot stop outs on a smaller chart, 3 divergences in the same location. So we're not worried about the tail. I like this question a lot. And see if you can find an example. We're worried about it actually printing. And when it actually prints, the reason that we respect it as a termination condition is because it represents a specific point in the market where the in control force, buyers from a top, sellers from a low, not only could they not push any further, but they also lost momentum. So it's like a line in the sand. And often they come back and they try to exceed it again. And that's where that idea of a pivot stop out comes. And this is why it's in the potential termination condition. Hey, Dooney. Nice to see you. And it's a key price where failure has already happened. Hey, Karis. Oh, weird. I was wondering about you this morning, actually, or maybe yesterday. I saw a name in the room. I was like, I wonder where Karis is. Probably traveling the world doing great things. Or creating a million rules. Jay, does that make sense? It's nice to have you back in class. So right now, this one has the potential, right? And if it makes a reversal bar, it's still going to have that potential. But even with the tail formed, and let's keep our fingers crossed. Let's see if we can get this one to make a reversal bar. I think that was a great question. Because if you go back historically, it's easy to assume that that line comes from the bottom end of this bar. But the line actually comes, and that one doesn't have potential. This line will actually happen about 2 or 3 bars in. Awesome. Fantastic. And then the second half of that question, let's show examples of a large chart midband when the triggers are a full bar away. I'd love to. So this is what we call the gap theory, Jay. And I talk about it a lot. And this is one that I messed up about 100 times, at least, maybe 1,000, before it really clicked to me. But what it says is that when price accelerates away from those large triggers, yeah, that's all it is. It's a gap theory. Did that just clear it up for you? We'll do the lesson for the rest of the crew. Awesome. When price accelerates away from the large triggers fast and, like, whoa, so fast, and it smacks into a midband, guys, this is when a midband can act as a termination condition because the gap theory says price is likely to close that gap back to the large triggers. You'll see it from a midband. That's when we recognize a midband as a termination condition. You'll see it when it hits Fibonacci resistance and those large triggers remain a full bar away. It's very, it typically closes that gap. You'll see it here. And it's all revolving around those large triggers being below or above that reversal bar marker. Price reaches Fibonacci. Even though it exceeds a little bit, the large triggers remain below. Price is likely to close that gap and to snap back. And here you see it a lot. Goes into that midband. And Dooney, you're saying that you can use a higher time frame to help you understand when this midband may hold? I like it. Because, and guys, let's talk about that. It's all chart reading, right? If, and watch this, you guys are going to hate how simple I make this, or you're going to love how simple I make it. If the 13.2 says odds favorable, right? And the 13.2 has no termination conditions, and the 13.2 is in the middle of a pullback, and that pullback, what time was that? I don't know. And that pullback is right to a midband inside of favorable large triggers. What Dooney's saying is that if you take a higher time frame, the 21.3 is to the 13.2 as the 13.2 is to the 5.1. Dooney says that when I have odds favorable momentum on the 21.3, when I have a clear path on the 21.3, and that midband becomes my potential large chart trend trade, a lot of times you'll see that gap theory. So in the sake of simplicity, Dooney, I say If the large triggers are a full bar away, I'm not necessarily using it initially as an opportunity to go against the trend, to go against the triggers. But as you grow with the software, the incorporation of that 21.3 makes that possible. But the gap theory happens all the time, guys. There it is right there. Price accelerates away and closes the gap. Price accelerates away and closes the gap. And you can, guys. But let me ask you, and everything that I do revolves around simplicity. In the beginning, brand new, still wet behind the ears. Guys, you don't need a 21.3 chart. You have everything that you need on 2 charts. If you begin adding other charts, you're adding more stuff that you have to think about. You're adding different time frames, you're adding different triggers, you're adding different areas. You're adding all these different things. Awesome. It's great to see you, Karis. I hope you're doing well. Thanks for jumping in. 2 charts get you where you wanted to be, guys. But remember that the patterns repeat themselves on every chart. Debbie, I love using a 21 chart personally when I have one of those 50-50 trades. Because if I have a higher time frame that lets me know that everything is screaming in the direction, that there's absolutely nothing in the way, it gives that 50-50 trade a little more impact. Now we have 4 divergences in the same location, guys. Price pulls back to resistance. All the trigger lines remain below, but there are no short trades because I don't have momentum. Multiple divergences say that that market may push up higher. Is it going to be a mid-band? Is it going to be a fib? Is it going to be one-to-ones? I'm not sure. This is why the rules are in place, guys. You know you don't have the advantage of momentum, and you know you've got multiple divergences in the same location. If the rules aren't met, you're not taking a trade. It's really pretty simple. Now it's just trusting the rules enough to sit on your hands and do nothing. There's crude oil. There's a mid-band. Look where the large triggers are, guys, below the reversal bar marker. And look what price is doing. Price is pushing, trying to get back to that area. Isn't that amazing? As we talk about these patterns, they're happening live right in front of you. What does that mean? That means you guys didn't go long right here, right? It means your mid-band is behaving as a termination condition. It means that this 50-50 isn't coming from a strong bottom. And this 50-50 on the bottom had divergence. And if you didn't take it, if you let just that one little rule let you determine whether or not you were going to take a trade, guys, that 50-50 with divergence, you didn't take it, you didn't get run over. You didn't get in at a mid-band outside of favorable large triggers because the gap theory is in place, right? Everything we do revolves around rules. Rules provide advantages. Advantages are really what's going to keep you guys on the right side of things. You just experienced JOMO. I love it, man. I'm going to trademark that one, Alan. I can't remember where I went. You went long, but you didn't have the red fib at 70? All right. Are you still in it then, Bobby? Where did you go long? Because even without the fib, right? Even without the fib, the gap theory is full blown, right? Which means you're not even considering an entry until all the way back here. You went long at 70.07 at a mid-band floating in the middle of nowhere. All right. So are you going to annotate that chart? Guys, you're going to make mistakes all day long, especially in the beginning, right? So what's a great annotation? Now we can come back and we can say gap theory says price is likely to return to the large triggers. Anything between the top of the bar and the large triggers is likely to get run over. And guys, this is how I annotated my charts, because I took this same trade 1,000 times. I really did. So let's do a couple things. The first one, whoops, just to get this down here, just reminding ourselves that we're rules-based, right? Rule 3 not met. And because the midband with the gap theory is a termination condition, rule 2 not met. And that's the only area inside of favorable large triggers. And if you waited because of the momentum, because of the trend change, because of everything going on, Bobby, that one worked out pretty well, didn't it? Because that might have been a little bit of overrun. It's okay to go back and annotate charts, guys, especially the losers. Talk about what you see. And what this is the fear of missing out, right? This is me saying that I really don't want to miss it. It might go without me. I'm going to get in. And look where your stop is. Your stop is just above an area of support inside of favorable large triggers with odds favorable momentum. And you're coming directly from a termination condition. Holy smokes, Bobby. This 96 trade is perfect, isn't it? With that termination that creates a full reversal, that gives you odds favorable, and the gap theory tells you exactly where that entry should be. Do you see how that all kind of came together? So there's that fear of missing out just a little bit. I like it. Great lesson there. Beautiful lesson there. And then it comes up, right? And it's still 50-50 on that fib. But now it's kind of done with an expensive lesson. Yeah. Rule 3, Bobby, just rule 3 keeps you out of that loser. And I know which trade you're thinking about. You're thinking about that momentum trade, right? When divergence doesn't print, using the mid-band. Is that where you were going with that? No? Okay. Well, then never mind. We're still not broken, are we? And now we're getting losses of momentum. The triggers are up. Rules are designed to keep you safe, guys. And if you're not winning more than you're losing, you were thinking high probability trend trade, right on. I don't disagree with the read. I just think you got a little jumpy on the entry. And that's okay. Because getting a little jumpy on the entry is going to keep you from getting a little jumpy on the entry next time, right? Guys, that's a bad bottom. And it goes straight to resistance and closes the gap. And then it heads back up, right? You've got odds favorable. You haven't reached the 1-to-1. You get one divergence, but it pulls right back to support inside of favorable large triggers and continues up. NASDAQ is tough to trade, but the rules work. There's that loss of momentum. Once again, we see multiple divergences, and look how the market reacts, guys. And Jay Solar, you had that divergence potential down here. Do you remember? But once the calculations were done, it didn't lose momentum. So now we have a pivot from nowhere as we approach a midband and resistance on the S&P. And the large triggers aren't following yet, guys. So we've got that little red flag waving saying, hey, hold on a minute. Let's see what happens. Guys, this is what we do every day. As we go through, we look, we teach lessons, we talk, and we try to make life as easy as we can for you guys. John Novak took an amazing trade this morning. I haven't even started looking at y'all's charts yet. Look at this termination condition. Absolutely no triggers through. Because there's a termination condition with absolutely no triggers through, this creates an opportunity for what we call an HVA trade, which means that trigger lines have to roll, And there has to be one of these HVA lines right inside of favorable large triggers. Guys, this is a trade that the rules are written. They're right there in Discord. They're right there on the educational material. This is a trade that creates an advantage to get down to that mid band, to get down to that first bounce point. This is a trade that I've studied extensively, so much so that I take it as well. This was my only trade this morning, guys. This was a good one. I'm over halfway to my daily goal just from one trade through patterns and recognition. And then John followed that up. Termination condition, then trade. Termination condition, and then trade. Trades that come from termination conditions create an advantage, guys. As I was studying this morning, that was that short trade directly to a mid band, directly to support. Large triggers didn't follow, and look how it closed the gap. Guys, the gap theory isn't always an opportunity to get into the market. Sometimes it's saying, hey, let's take an exit at that key Fibonacci area because the large triggers aren't following. Even I'll post pictures in the room, guys. If I'm fortunate enough to find a trade before the day starts, I will always share it. Gary posted in the room today. Gary says termination creates full reversal. Full reversal goes into a termination condition and back to a termination condition. And he goes pretty much a definition of a channel. No reason to get chewed up when the market's bouncing off of resistance, when it's bouncing off of support. Let it clear, guys. Rule number 2. But once it clears, guys like Ron say, I've got strong triggers. I've got no termination conditions. I have taken my chart reading and adapted a plan that allows me to take advantage of these moves in small increments. And that's a nice $460 trade to get the day going. Ron, beautiful trading. Guys, one of the things, and I point this out every day, every trade Ron takes looks exactly the same. And guys, I mean every trade Ron takes looks exactly the same. Well, if you go back on his last 100, 95 of them look exactly like this. Look at strong triggers, no termination conditions, quick in, quick out, GTFO, make the money, go to the beach. Guys, this is a plan. A plan allows you to be pragmatic. A plan allows you to be mechanical. It allows you to get in and get out because rules are met, not because of what you hope the outcome will be. Because this has been proven to win more than it loses for Ron through his study. That's a great trade. Let's see where we're at. Gary taking a NASDAQ trade yesterday. Gary fighting direction, fighting momentum, but you do have a termination. That termination creates a full reversal. You're in at the bottom fighting everything. I'm not exactly sure why you took this trade, but nice trade. There's no rules on it. I'm just not sure. Because for me, that looks unbelievably dangerous. But I'm a little conservative. And then there's that same look, right? There's one. Looks just like that one. You guys see it? Looks like a heartbeat. Consistent, 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 consistent. Advantages, guys. You've got to have them. You've got to have that advantage of momentum. You've got to have those no termination conditions. You want to put yourself in a position to have the greatest chance of success. And if you do that, it's going to work. Philly, that's not your trade yet, though, right? Why? Because there's no pullback. Because there's no area inside of favorable large triggers. Because you're still learning to do it easy before you do it hard. Some people gravitate to this one. They love to jump in and out. I haven't figured out how to do it. I screw this trade up every time. Because I can't figure out where my stops go. Isn't that funny? I teach the class. Ron's trade isn't my trade. I have to have a plan that fits my pain tolerance, that fits my abilities, that is comfortable to me, that makes me confident every time I take a trade. I don't feel confident on this trade, not like Ron does. I haven't studied it the way he studies it. PPF, I don't know what that means. Or is it just... I love it. Personal pucker factor. That's it. We've all got one, don't we? And guys, there's people in this room that have looked at this trade and have made it theirs, and they're finding success with it. I don't need this trade to be successful. You want to know what? I like to keep it simple. My pucker factor goes up exponentially the further outside of this I get. That's awesome, Tony. I love hearing that. Jason's amazing, isn't he? So what's going on in the live market? We have a bad bottom. This bad bottom has all sorts of divergences at it. It might have been a little bit of an overrun. Price is accelerating away from those large triggers. The large triggers aren't following. We're in a holding pattern, right? I don't have rules met for a long. Doesn't this look exactly like what just happened? Was it crude that it just happened on? Looked just like it, didn't it? Comes back, hits support. Now we have a solid termination condition that creates a full reversal. Now we have smalls up, large up, smalls up and outside, synthetics up, large up. What do you think, guys? Is this a termination condition? That's a pivot. Straight to the gap theory. Gap theory. Divergences on a 50-50. Smalls turn. Support holds. And now everything is above 70-10. Every trigger's angled up. Everything is above the area. Guys, if this market is going to turn, I have a clear path. I have an area inside of favorable large triggers. I have no divergence. But I don't have odds favorable momentum. This is a medium probability trade at best, right? If I take the trade, I have to manage it assertively. If I don't take the trade, well, then I've got nothing to lose. We'll see what happens. It's fun to see what happens, guys. Take a picture, annotate it. What do you see? You don't have to take a trade to take a picture. So let's put a shape, right? Let's put a shape where it's likely to go. And let's say doesn't have odds favorable momentum. We'll have to manage assertively. If divergence prints against, we'll exit the trade. And let's just say we have a plan, right? We have a plan. Well, it came right to my area of support inside of favorable large triggers. It already gave me a reversal bar, which means that if I'm in at 11, guys, my stop is right there. And if I was in at 11, look at this. I already made it to 21, guys. I already have $100 in the bank. That simple. On a medium probability trade. So what's changed, right? This is what we say. We're in the trade and we're seeing these ticks go against us and they're going up and down and my heartburn's flaring and my palms are sweaty. What's changed? My triggers are still up, right? My triggers are still up. My area is still inside of favorable large triggers. Even if I went break even, I'm still in this trade. I have to make it to 31. If I'm in at 11, I've already been paid on my first contract. I'm already at break even, right? And it either goes to 31 or it saps me out at 11. I don't have any control over that, but I already have $100 in the bank. And look how close it got. And look how nervous you were. But it never hit it. Pragmatic, mechanical, methodical. It never changed, did it, guys? I still have strong triggers. Oh my goodness gracious. I sure am glad I didn't get out of that trade because my heartbeat went up. I sure am glad I didn't get out of that trade because I formed an opinion about what that bar was going to do. But I did say if divergence prints, I'll be out, right? Because it is medium probability. because I don't have that best trigger look, which means that I can take my stop and put it 2 ticks, 1, 2, below that reversal bar marker. If divergence is going to print, I'll know it by then. So now I've even locked a tick into it. But now my small triggers are up, my large triggers are up, my synthetic triggers are up, my small triggers are up, my large triggers are up, my areas are up. Guys, is there anything on my charts that says down? Is there anything on these charts that suggests that this market isn't going up? I've got zero risk on the trade. I've already been paid. I know where my target is. Can you sit on your hands and wait? It's terrifying, isn't it? But Mark, it's monopoly money. What if I lose? Who cares? Who cares if you lose? Guys, look at that amazing entry that you had. You had zero risk. You already got paid. Do you believe in the rules enough to take this trade? Is your chart reading where it needs to be to take this trade? Did you guys notice that it pretty much came back to a mid-band inside of favorable large triggers? Keeping your stop where the market shouldn't go. Are we going to make 31? What do you guys think? If a reversal bar in the direction of the trade is a stop mover, right? If this becomes a reversal bar, can't I move my stop again? Now I've got 3 ticks locked in. I'm behind a pivot. Everything says up. I'm still trying to get to 31, guys. We're just talking through it. This is what it's like when you take a trade. Why did I get in? I got in because of a termination condition that made every chart agree. I got in because I had an area inside of favorable large triggers. I stayed in because not a darn thing has changed since my entry. It's only gotten better. Small charts are nothing but fluctuations. Oh, I am 2 ticks from my target. Is it a $300 trade, guys? Cross your fingers. Man, this is exciting. Oh, bingo. There it goes, guys. Where's it going? How about Fibonacci resistance with this momentum? That feels like an even better target, doesn't it? I'm cool with $300. But as I grow with the software, I'm going to start trusting these fibs a little bit. The same way I trusted it to get me in is the same way I'm going to trust it to get me out. Guys, does anyone have a question? This is what I teach every day. This is what you will learn every day. This is what you need to study so that you're comfortable with it. Does it work? Holy shit. Oop, pardon my French. Good golly, Miss Molly. It sure does. I didn't know that was going to happen, but I sure knew that that was the potential. Guys, you have your hands on the most amazing software the world has ever seen. I believe that. You have access to the educational room. 15 hours every week, live feedback to make sure you understand how to read these indicators. Give me a show of hands, guys. Who made money on it? Your chart is broken. Just rebuilt it on NT8. Yeah, something's not right there, Gary. Except that you're an hour apart. Show me a picture, Tan. And Gary, get with Jason real quick. No, that's great. Man, Tan, I can't tell you enough. Take everything on simulation. Show me every picture. Let's talk about all of it. I didn't even see you sneak in. Let's see what you did. You new guys are going to make me proud, aren't you? Everything says up. Where did you get in? I can't see your entries. Can I show you something, Em? Well, I'm going to, whether you want me to or not. Check it out, guys. Wow, it's still going. Oh, my momentum. Hey, Em, if you right-click on the chart and go to Data Series, this is for everybody. Scroll to the bottom And it's going to allow you to plot your executions and your markers. And you can do this after the fact. Go through and make sure that it says text and marker. And what that's going to do is every time you enter, it's going to show you where you got in and what the price was. And every time you close, it's going to show you where you got out and what the price was. And that makes it a little easier to do math, to see entries, to talk about them, especially when you pull up the picture like this. I'm not sure where you got in or where you got out, but I think we did a pretty good job talking it through class. Everybody knows this is your entry, right? Look how pretty that is. And guys, what changed when the 5-1 tried to scare you? Anything at all? Did anybody have anything change? You still had strong triggers. You still had an area inside of favorable large triggers. No divergence printed. These are the ones that you don't want to miss, guys, because if you got in at 10 and out at 44, that's $340 on one contract. That's a heck of a trade. M, can you show me that same picture with your entries? Tanverb, can you show me the picture of your trade? Do you need help with TechSmith capture? I'm happy to help. We'll go through a lesson. You do need help? Perfect. So here's what I want you to do. We've got the chart, right? And let me pull up my TechSmith capture. Do you have your TechSmith capture? If you search, and I know that this was loaded on your machine, type in TechSmith or Tech or anything like that, and it's going to give you that capture app. And just click open. It'll give you this icon. And from this icon, you've got your capture software. Let me know when you have it up. We'll take a picture together. Cool. And on the S&P, that's NASDAQ. Let's go to the S&P. Let's see if I can guess where you got in. That looks like a likely suspect, doesn't it? And then if you didn't catch that one for some reason, look at these shenanigans. Am I close? That's what I see on the S&P. And then if you're willing to take a 50-50 trade from a bad bottom with divergence, that was a potential entry as well that had to be managed out. You were in at 44.15. So Tanverb, you use support inside of large triggers with no divergence and strong triggers with the advantage of odds favorable momentum. What a crazy recipe. Nice job. Let me know when you get TechSmith capture in, because I want you to be able to show those in class. I want to talk about all of them. Awesome. Oh, there you go. Nothing updates while it's calculating. That's why you were calculating, Gary. I didn't even notice that, John. Good job. Look at the top of your chart. NinjaTrader 8 hadn't finished building yet. It was still calculating, which means that it's going to be down here. Until it's done calculating, it won't run in sync with one that's actually running. So the chart was still rebuilding, which is why it's showing a different price. And then it'll catch up once it's done doing all of its calculations. You can't. It's just calculating. Did you change the chart? Or you rebuilt it? Right now, it's when you open a chart, that calculation is getting all your fibs. Well, and see, you left that out of the equation, right? It's still calculating an hour into it. I would get with Jason and make sure something's right. Is your NinjaTrader 8 connected? Did your connection drop possibly? I've done that before. I've waited for charts forever and then looked over and turned out that I wasn't where I needed to be. Your 13.2 has more lines. Are you in cahoots with John Novak? Is he giving you extra fibs, Jay? That's not cool. It may be me. There's a chance that it's me, Jay, because I go through and I move so much stuff. And I bounce around a lot of things, and I take stuff out and I put stuff in for class. It's very possible that it's me. So let me do this, guys. When things don't seem right, and we can both do this, I'm going to disconnect from my live account real quick, and that's going to stop my charts right in the thick of things. I'm going to go to Tools and Options, and I'm going to go to my data, and I'm going to make sure that it says Do Not Merge. This is the first thing that I do. And I'm just going to reset my database, and I'm going to repair my database, and I'm going to click OK, and then I'm going to reconnect to my live account. And then you notice how my market is stopped because I just reconnected. So we'll see what it looks like. Maybe it fixes it, Jay. All right, Tanverb. Look at you. Beautiful entry at the area inside of favorable large triggers. Absolutely nothing has changed, and you're using Fibonacci resistance as a target. Tan, how long have you been with us? I don't recognize the name, and you're black next to your name here. I usually get a pretty good idea of who's new in the room, but I don't recognize yours. First day, really? And you're already following rules. You have a bright future ahead of yourself. This is outstanding. So the only thing to do now is we want to create repetition, right? We want to make sure that you always know what you're looking at. So let's do this. Let's annotate it. What got you into this trade? The first thing was probably odds favorable, right? Favorable triggers. That gave you the advantage of momentum. And then you had smalls above the area with odds favorable momentum. So it was a 50-50 look. That's okay. And then over here, whoops, that's the wrong one. And let's use the call out button, right? You had an area inside large triggers using fibs for targets. So now what you can do, Tan, is you can go, why did I take this trade? I want to make sure that I'm totally cool with everything that I did. I had odds favorable. It was a 50-50. There was no divergence. I had strong triggers. These are my areas inside. Holy smokes, I love everything about this trade. So you're taking that trade and you're pulling up your spreadsheet and you're going to that copy of my tracking and you're putting it in there. I'm just going to post the link. We won't turn it into a hyperlink. Not yet. And you're asking yourself, what kind of trade was it? Well, it was a trend trade. How did you feel about it, Tan? Were you relaxed or nervous? Were you confident, jumpy, frustrated, bored? I would be confident, personally. I'd feel good about that one. I love advantages. And it was a trend trade, but it was a 50-50. Was it a good top or bottom? It wasn't. But you didn't know that first day. You're like, I don't know. I'll show it to Mark. He'll tell me. Your triggers were odds favorable momentum, right? Your 5-1 triggers were odds favorable momentum. I put that in the wrong row. Your first target, I'm assuming won. Your second target, I'm going to assume is going to win. And then you're putting perfect trend trade. Don't miss this one. What would have made it a better trade? More contracts. Not a 50-50. Exactly. It's a medium probability trade, Tan, but check it out. You had the advantage of momentum on both charts. You had no divergence on your 5-1, very strong triggers, and your window of opportunity is 3 ticks wide. 3 ticks wide. Which means that when you got in here, your stop, and I don't see your stop, which worries me a little bit, but your stop is maybe 5 ticks. You could have taken profits on the first contract at your first trouble spot, right? So if you're in at 1575 and out at 1875, you have 150 in the bank with zero risk on a medium probability trade. And you're looking for that next key area. I like this trade. I like it so much that I'm going to take your trade. I stole it. I'm not ashamed of it either. And I'm going to create a hyperlink, and I'm going to come to my favorite looks. And on day one, you're in the Hall of Fame, my friend. Nice job. The only thing you have to do now is the same thing every day until it becomes easy, until it becomes effortless. The advantages are there. It's a beautiful trade. It's a rules-based trade. And you're right. At the first trouble spot, you could have taken them. You didn't have to. But if you did, it's hard to feel bad about 150 bucks, right? Control V. Geo, if you're in the pop out, you have to Control V. It won't let you right click and paste. All right, so Jay, mine didn't change. So this is where I go through and I always ask. There you go, Geo. In the morning, did you delete cash and tick? And I think we're on the same time frame. Are you 10 days back, Jay Solar? I might need to rebuild. You might need to rebuild. But I've done the first thing. I've reset and repaired my database. And now for me, if that doesn't work, maybe this afternoon I'll rebuild everything. But you can try the same thing. And then Geo, you're looking for that momentum style, right? Clear path, get in, get out. And then on your second entry, Geo, you don't have rules on here, so I'm just going to assume you're doing what Ron's doing. You've got weakened triggers right at a potential termination. So maybe that last one's getting just a little bit greedy. That odds favorable between here and here, that odds favorable between here and here. Do you notice how you went from odds favorable to anything can happen, but you were still creating that expectation that the market should go up? Here it did it effortlessly. Here it did it effortlessly. Here without the momentum trade doesn't work. And if you think of it like that, guys, what do you suppose is the first thing that you have to have for a momentum trade? Momentum, right? And this is what we call logic. If a momentum trade requires momentum, I've got it. Where don't I have it? And Geo, it's not a coincidence that that's the one that didn't work. Yeah, it's hard, isn't it? Because you got paid, you're excited, you're like, here we go. And your brain says, hey, don't remind him that we need momentum. I think he's going to pull the trigger again. I love that adrenaline rush, right? Great trading all the way up. And that's the one where you just kind of pump the brakes and go, I'm going to wait a minute. Nice job, Gio. Thanks for sharing that. And guys, I'll do this as well. This isn't a high probability trend trade, but I know exactly what Gio's looking at. So whether you're on day 1 or day 1,000, guys, I'm always willing to give feedback. I'm always willing to talk to you about what you're doing. Goku, I've been looking for you for a week. Welcome to Nexgen. Welcome to the class. Beautiful picture. Guys, if you're brand new, like you get through the demo, I hope nobody has any doubts. That's always the goal for me, is that you have zero doubts, that you're comfortable, that you're confident, that you start your lease, that you buy your software, that you commit to the process. Just because you've committed, just because you've gone live, just because you're doing all those things that aren't on demo anymore, this classroom is still your classroom. So Goku, I want to see every trade you take. I want to see everything you do. Just because you committed doesn't mean that we're done. We're going to keep that education going every day until you get to your goals. And that goes for all of you, right? Philly Trader, I should see purple or green next to your name pretty soon. You too, Vin. Commit. Get in that process. Look at this. 50-50 trade. 1, 2, 3 divergences. Split triggers. That's not the best of the best, is it? That's kind of sexy, though. That's crude oil with odds favorable momentum. That's crude oil with no termination conditions. Egads and little fishes, this is an area inside of favorable large triggers. Will somebody please just give me a pullback? Do you guys see it? Do you see how fast that happened? This is what we call a pre-trade picture. Let's annotate it. You know what? Let's do even better. Let's use that checklist and a couple arrows. Is the market coming from a good top or bottom? Guys, is it a termination condition that creates a full reversal? Help me out with this. Philly says yes. Tony says no. Bobby says no. So Philly, remember that a termination condition means that price reached an area. So I would need a fib or one-to-ones or a divergence high here for this to be a termination. But since none of those are here, it's just a pivot. Of course I'm right. John Novak pays me to be right. But that recognition, guys, this is why I ask in the class, because sometimes, and I'm so guilty of this, sometimes I just misunderstand the lesson. My biggest misunderstanding in lessons, guys, was gap theory. I kept getting slaughtered until I finally started posting in the room. All right, so that's a no. Is that a deal breaker, guys? It's not. We can still take it. Do we have odds favorable momentum? Are the small below the large or the large wide? Are they angled in the direction of the trend? Philly, Vin, Tan, talk to me. What do you think? Bobby says yes. Bobby drinks. No, I'm just kidding. Bobby doesn't. I'm just kidding. But don't trust Bobby. Make sure that you know, right? You guys say yes. I agree wholeheartedly. That's my best of the best look. Termination conditions are not true. Do you remember the recipe? Price reaches an area. Have we reached the area? Let me put a shape around it. There's our next fib. Has price reached the area, guys? Not yet. So that's a target. That's not a termination condition. That's a target. And now let's make sure. Did the small and the large get to the other side of support? So I have a clear path, right? That's a yes. Oh my gosh, do you see how easy this can be? From the highest point of the triggers to the lowest point of the triggers. I don't even have a reversal bar. From the highest point of resistance to the lowest point of resistance. Guys, I've established a window of opportunity because I have odds favorable, because the path is clear. I'm obligated to put that sell limit right there. because I have the advantages in place that tell me that the odds are favorable that I'm going to win more than I lose. That market pulled back. It's still inside the window, isn't it? That's nerve-wracking, isn't it? Guys, if I entered the market at 32, I'm down 7 ticks per contract. My initial stop is where the market shouldn't go. Guys, I have so much faith in this look because I've studied it over and over. I have so much faith in this look because I've back tested it, because I've watched it, because I've taken pictures of it, because I've presented it. Whoop, there's my reversal bar. That risk just reduced, didn't it? There's my reversal bar. From inside the window of opportunity with odds favorable momentum and no termination conditions yet. There's nothing for me to do, guys. The only thing that I want to see is that you can identify a window when the rules are met. That's it. Not worrying about the wins or losses initially, worrying about nothing more than whether or not the rules are met and identifying the area where the market is likely to continue. Clearly, this is the area where the market is likely to continue because you watched the market tried to go down from there, didn't it? You're not in control of whether it wins or loses. The only thing you're in control of is whether or not your rules are met. You're still inside that window of opportunity. The rules are still met. Nothing's really changed. I don't know what the market's going to do, guys. I'm not in control of that. Smalls are up, large are down. First glance, guys, is there anything to be done right here? Not a thing, right? Doesn't agree. What did that look like on a 5-1? Well, that pulled right back to resistance inside of triggers, but they were split. You guys want a quick lesson on favorable large triggers? Let's use NASDAQ as an example. You ready? Guys, everything says down, right? Everything says giddy up, here we go. The trend is down, momentum is down. We're coming from a termination that creates a full reversal. And then over here on the 5-1, I'm thinking I'm going to take a trade. And there's my reversal bar. And I want you to see this. From the lowest point of the triggers to the highest point of the triggers. From the highest point of resistance, whoops, to the lowest point of resistance. Guys, you have 8 points. 8 points in the window on a 50-50 trade with divergence. Is it going to go from the top or the bottom? Is it going to go at all? I don't know. Bounces in the middle, comes down a little bit. Guys, your risk is exponential on that trade. Awesome, Gary. You can use a window of opportunity to decide whether or not risk is acceptable for you. Still a 50-50 with divergences, and look how it's pushing lower. And guys, if you took this trade, you're still in this trade, aren't you? Your first target's already been hit. Probably just now. You might have been stopped out break even. But it did it again, didn't it? There's your window. If you were in at 32, there was nothing to do until you hit 22, at which point you were up $100 and probably taken out of this trade break even. Give me a Y in the room if you're with me, guys. We talked about the conditions. We took the picture. We looked at it. All you have to do is practice it. Practice it until it becomes easy. A lot of you guys are going to jump out right here. Who jumped out right here? When the threat of loss affected you. When the threat of loss made you abandon your plan and change everything. Anybody? Nobody? Good job, guys. The most profound thing I've ever read about being a day trader is this right here. When you stop expecting to win every trade, you're going to start winning most of your trades, guys, if you're following those rules. I don't care about the result. And it took me about a year to get to that point to where I could say I didn't care about the result. I care about the execution. Guys, I am so willing to take a loser if I followed my rules, because my rules win more than they lose, period. If they didn't, they wouldn't be my rules. Does that make sense? If your rules don't win more than they lose, why the hell are they your rules? Guys, I give you everything you need to be successful. Everything that you need to be successful. You just have to study it a little bit. Paul's put in the time to study, right? And Paul says, with this look, you better believe I'm taking the entry because my rules say I have to. Paul gets in, Paul gets paid, he's out break even. Amen, John Novak. Paul, beautiful execution. Pragmatic. Emotionless. Paul is like a robot. Paul also says he's got a great bottom. It's a little narcissistic, Paul, but that's cool. Paul says a termination condition and everything's going up. And there's that beautiful entry once again in quick profits. And I think we all know what happened on this one, don't we? Because we talked about it live in class as it was setting up. Paul, you're the only person that showed me this beautiful entry. And that one hit targets. Paul's done for the day. Look at that. Zero risk. Everything says up. Yeah, me too, Paul. What a great trade. I'm going to steal his screencast address. I'm going to go here. And it's been a while. Paul's been with us for a while. And when you've been with us for a while, I don't always put your links into the spreadsheet like I should probably. Because I've got like 250. But that is definitely Paul's perfect long. Is everybody working off their spreadsheet? Everybody's filling it up, right? Does anybody want my spreadsheet with 230 examples? Vin, Tan, Smart Deals, M. There you go. Take mine. Guys, I'm not going to hold back from you. I'm going to give you everything that you need to be successful. Take it. When I put a high probability trend trade checklist in the room, guys, steal it. I'm giving it to you because I've never had anybody in the history of this checklist do worse than 20 or 80% winners, 70% winners, sorry. I'm giving you the same checklist with the pictures because people are visual. And annotated pictures resonate in the brain. And guys, I share this simple trading plan because it's been proven to bring success to people. This trading plan came about, I don't always share this story. I had a gentleman, and one of the sales representatives for Nexgen called me one day, and he said, "Hey, Mark, I got a guy. He's just struggling. And he's really having problems right now. Can you talk to him?" And I said, "You know what? Absolutely, I will." So I called this gentleman and we talked, and I said, "Do me a favor, show me your last 10 trades." And every one of his last 10 trades looked different. Some of them fought triggers, some of them were in determination conditions. Almost none of them came from areas inside of favorable large triggers. He was trying to take high volume area trades. He was trying to take counter trend trades. He was trying to catch momentum style trades. He was really trying to catch everything but the highest probability trend trade. And he told me, he goes, Mark, he goes, I'm getting my ass kicked and I'm losing money. I am bleeding money, which is horrible because if you're not winning, why on earth are you trading live? But that's none of my business what you do with your money. So we talked on the phone and we took about 30 minutes. And in that 30 minutes, we developed a plan. And the plan revolved around this checklist. Guys, this checklist came from a gentleman that was unsuccessful. It came from a gentleman that was losing 80% of his trades, that was hemorrhaging money out of his accounts. And we talked about keeping it focused and rules-based and looking for the absolute best. And we talked about keeping the management pragmatic, take the emotion out of it. And guys, this simple plan for consistency came to be from somebody that was horrifically inconsistent. But it was such a good plan and such a great focus that I've been using it in my classes for 2 years, and I've been sharing it with you guys for 2 years. And the people that use this plan are successful. Let that resonate. Let that sink in. The people that are using this plan that I know of are successful. They're winning more than they lose. Their accounts are growing. Their spouses aren't mad at them. Their dogs don't bite them. The neighbors don't talk behind their back at the neighborhood barbecue because they're consistent. They're looking for less, and then they're taking these trades with more contracts rather than searching for more trades. Guys, this is the easiest, most pragmatic way, and John put it in the room, and it's I love it. Where did it go? If you're not winning more than you lose, if your rules don't win more than they lose, stop trading whatever it is you're doing and trade our rules, guys. These were built for everybody looking for the best of the best. This is 2 trades, 2 looks, 1 sheet of paper, guys. Take it, steal it, use it. Commit to it, embrace it. It's been proven. The path is verified. Look at the fluctuations on the 5-1. Did anyone notice that we're still on 1 bar on the 13-2? And look at how much happens in just 1 bar on the 5-1, guys. We can take a 13-2 and we can refine it to the best of the best entry. We can identify where the market is likely to continue when the rules are met. You can take that entry, you can have a pragmatic stop, you can get paid on the way down. Looks like you got in a tick high, right? You got in on the wrong side, or right at it. And Alan said, hey, that was $100 and it didn't hit. I'll take 2 contracts at 25, or take a contract at 25. Because $80 is better than $0, right? And then break even plus 1. You still made $90 on this trade, Alan. Beautiful management. Great job. And the fact that you held through this, Alan, celebrate the victory. These are the ones that used to pull you out, right? Guys, I notice what you do. I notice what your tendencies are. And Alan, this is a huge victory for you. You let the 13-2 lead the way. Which means that you're 1 step closer. Just waiting right now. Waiting to see what happens. Pretty cool, isn't it? Same thing every day, guys. I don't change my message. I don't change the looks. I don't create new patterns. I talk about the same darn thing over and over and over. Odds favorable, clear path, no divergence, area inside of favorable large triggers. Guys, if you got in at the top, you made your money before divergence printed. And this one pushed beyond the window. You might have taken a small loser there. How many of these tails can you circle until you believe it. How many is it going to take? I don't know. I don't know the answer. Guys, that 50-50 is still trying to figure out what the hell it wants to do. Multiple divergences, everything set down. You guys are staying out of it. But now everything's starting to agree, right? The large triggers are starting to go up. The synthetics are still up. The small triggers are up. The smalls are above. Everything's starting to agree a little bit. It looks like it wants to push up higher. But how about if we clear a space first? How about if we give ourselves a clear path? Whew. That's a lot for a day, isn't it? How are we feeling? Guys, I like feedback. If you don't want to tell me in the room where you're at, how you're feeling, email me. I always appreciate an email. Hey, Mark, I'm learning, I'm getting there, I feel good about it, but I could really use a little help on this. Nobody has to know that it's yours, but guys, I'll dedicate a portion of the class to making sure you get what you need. If you send me an email that says, Mark, I really need help on termination conditions, well, then I'll focus on termination conditions a little bit longer. Mark, I'm really working. Smart deals, how long have you been with us? That'll help me. 2 days? Good. Then you're feeling exactly like you should feel. It is a process. And I like to show this picture. So smart deals, that's you taking all of the information in, right? It feels like a lot. And there's a reason that I keep it simple. Because if you allow it to be only 3 things, the first thing that you're going to learn is momentum, foundational learning. So smart deals, your only goal on day 1, literally your only goal on day 1 is to be comfortable with the idea that when the trigger lines separate in the direction of the trend, you have the advantage of momentum. Does that make sense? Are you comfortable with this look? Most people are on day 1. That's okay. Yeah. So on day 2, or maybe day 8, whatever day it is, but when you're cool with odds favorable momentum, well, then you add in that equation, right? Let's talk about termination conditions and make sure that I have the advantage of a clear path. You may spend a day here, you may spend a week here, but the reality is, smart deals, until you're comfortable taking momentum, right? And then coupling it with a clear path, then there's absolutely no reason to give yourself the burden of feeling like you have to catch every entry, right? Because the entries come after you're comfortable with momentum, after you're comfortable with a clear path. Everything that I do in this classroom is foundational. I introduce all 3 concepts in the first hour because everybody's at a different place. Guys, be okay with where you're at. Give yourself a little bit of grace, right? I'm new. And because I'm new, I'm going to piece it all together, right? But the cool thing is then when I get good at momentum and I get good at no termination conditions, and then I add that third piece of the puzzle where I can identify where the market is likely to continue, well, now I'm sitting on a gold mine. Now I'm sitting on a high probability trend trade, a trade that wins more than it loses, something that's going to afford me the luxury of 70 to 80% winners. So smart deals, you're right where you need to be. And I'll tell you what, anxious happens for a while. Because even when you learn how to identify it, well, then you've got to learn to trust it, right? Identifying it, you'll have that down in the first week, first 2 weeks. But then you've got to learn to trust it. You have to, and let me pull up my handy definition. You're going to create a firm belief in the reliability, the truth, the ability, the strength of someone or something. The something happens to be the high probability trend trade. And when you have that belief, when you have that trust, that's when you're going to have confidence. And that's when you're going to have belief and faith and freedom from suspicion or doubt. And guys, this is what keeps people from becoming clients. This is what keeps people from joining the family, is that freedom from suspicion or doubt. This is why I teach you how to backtest it. This is why I teach you how to study it. This is why I tell you, prove me wrong. Make it your mission. Because you'll be in the family for life if you give it that much work. You're going to have sureness and certainty and certitude, assurance, conviction, and reliance. And smart deals, this doesn't happen in the first week. This won't happen on your demo. This is going to come through study. Right? Ron, enjoy it. I hope the weather's great for you. So you're going to do it through study. And what you're going to do through study is you're going to eliminate distrust and skepticism. But it's a process. Just like Paul said, it's a process. It works. Guys, if it didn't work, we wouldn't be here 27 years later, right? The hardest thing that you'll ever do is absolutely nothing. And that sounds funny, but the hardest thing that you'll ever do is absolutely nothing because your rules aren't met. Jay Solar, I don't teach anything that wins as much as the high probability trend trade, which is why it got the name high probability trend trade. And I don't really have numbers on the other trades, but I know that they are potentially lower than 70%, which means that they're not bad trades. They just don't have the giddy up that high probability trend trade has. So why not, and call me crazy guys, why not let that highest probability trade be your core, right? Be your foundation, be your go-to, be the anchor on your tug-of-war team. And then when you're making everything that you need with that one, I had a gentleman send me an email the other day, or maybe it was a lady, I don't know. I do, but it doesn't matter. And they asked me, Mark, how do I trade in determination conditions? What's the formula? What's the recipe? What are rules for going headfirst into an area likely to stop the market? To which I replied, I don't know. I believe in termination conditions. I believe in their ability to stop the market. I believe that when price reaches support and none of the trigger lines go through, it may create something that takes away my advantage. I believe that when price accelerates away from the large triggers into a Fibonacci area, that it's likely to pull back, and there's no reason for me to take that trade over and over. And your brain's going to get you. Jay Solar, break your rules. You're not busy enough. Break your rules. Hey, Bobby, you've been sitting on your hands for an hour. Wouldn't it be great to take this long? Because what if it works? And then that logical side of you, that angel on the other shoulder says, hey, Paul, you don't have momentum. You don't have a clear path. And you definitely don't have an area inside of favorable large triggers. What's the rush, buddy? Why? And you develop that trust. You develop that trust over a course of time, through repetition, through practice, through study. My job is to keep saying the same thing over and over until you believe it. Until you believe your rules, not until you believe me. I'm a pretty trustworthy guy. I'm going to do everything in my power not to steer you wrong. Guys, we've got 10 minutes. Is there something you'd like to talk about? If you're brand new, allow yourself to be new. All you guys that were engineers weren't allowed to build a bridge your freshman year. All my medical people, you weren't doing appendectomies on the first day of med school, right? You had to build a foundation. You had to create knowledge, repetition, created confidence. Nobody wants a nervous doctor. Guys, you don't want a doctor with big hands either. But once you go through that path, man, it becomes easy. It really does. And if you're looking at your trading and you're at 40% winners, are you giving yourself the best chance of success? If you're 50% winners, are you doing everything that you can do? Guys, I firmly believe that if you're lower than 60% winners in your trading, you're probably taking chances that aren't justified. And if I can make $1,000 in winners, it doesn't mean anything. if I'm taking 1,200 in losers? Has anyone ever taken 4 amazing trades, then wiped them out with 8 bad ones? You're up all this money and you get cocky and confident. Man, I am the greatest trader ever. I'm going to break every rule. And you go from being up 1,200 to down 1,000. And in your head you say, man, I'm only down 1,000. But the reality is you're down $2,200 from poor decisions. My goal is to help you avoid those poor decisions. To embrace simplicity. Anybody learn anything today? I hope so. Uh-oh, John posted something. John Novak, continuing to trade after hitting goals has been bad for me. Hard to not want to make more, but there's a mental switch when you hit a goal that makes you either too puckered or too aggressive after you hit a number. Make the number, turn it off. That's a huge lesson. That's not a bad number, John Novak. And he was 66.07% profitable. Made his money, called it a day, went to sim, let the adrenaline come in. And John, let's not mislead people. Not that you're misleading people. Guys, this isn't $20,000. This is $250 a contract. This is a $1,000 day. That's the one part that you're not seeing here. Guys, this is a 4 lot, creating $1,000 in profit, $250 per contract. That's simple, attainable goal, right? And this is on 4 accounts, $250,000 accounts. Oh, so this is 4 accounts. Is this 4? That's 500 per contract, which is John's goal. That's 500 per contract on 4 $250,000 accounts. So guys, that's 20,000 minus Apex taking their 4. That's a $16,000 day. Trading somebody else's money. How cool is that? And when you lose your concentration, you're toast. And when you get cocky, you're toast. And when you break rules, you're toast, guys. All of your short trades won, John. Your long trades, not so great, right? 40%. But 40% on the long trades still made $4,000. 100% made 16. 60%. Got an opinion a couple times. Tried second chances. It happens, right? Guys, that 20 grand is 500 per contract. It's the process. It's not the results. The results come from the process. Everything's set up and the market is still going up, ladies and gentlemen. You just had to wait for the shuffle on the small chart. You were in at 24.75. Whoo! Show me your entry. Oh, you're out at 24.75. Where were you in? So Tan, this is where you show me your picture. And let's see what we did, right? Oh, you're still in from 15? Nice job. Great trade. You held through that whole thing, huh? Pretty easy. $450 a contract. What an obtainable goal. And Tan, the biggest thing is you traded with momentum and you traded with a clear path, right? You gave yourself the advantages to do what you do. Guys, we're going to come back tomorrow morning at 9 a.m. and we're going to do this again. Those of you that didn't show me a picture today, show me a picture tomorrow. Those of you that didn't annotate a chart today, annotate it tomorrow. Let's start this all over. Grab 3 of your buddies. Talk to your salesperson. They'll make you a deal. Bring your friends in, guys. If you have questions, if you have issues, if you have problems, if you need help, reach out. Absolutely. Guys, I'm not going anywhere. You're stuck with me. And I'm going to tell you right now, I'm a pain in the ass when you start breaking your rules because I'm going to make sure that you know, right? But I will celebrate over and over and over again when you follow them. There are no questions other than personal that are off limits. I'll be back at 9 a.m. tomorrow. We're going to do it again, guys. I'm going to talk about the basics. I'm going to talk about the rules. You're going to post your pictures, and we're going to keep looking for the absolute best of the best. Thank you for being here today. I'm going to shut down and wait for some high probability trend trades. I'm going to look for my rules to be met. And my rules are the same rules as yours. And then John did another 9 grand on Sim on a 5 lot. Doubled it since quitting. Could have, would have, should have. Who cares? $20,000 day, guys. That's not so bad. I'm sure some of you have, but the average human doesn't make $100,000 in a week. The average person doesn't make $400,000 in a month. I'm not even going to try and turn that into the year, but it's somewhere around what, 48 million? It's a lot. Guys, that's it for me. Thank you so much for being here. One day, one trade at a time. That's all it is. Guys, I'll be back tomorrow morning at 9 a.m. If you have any problems, please, my email works. Don't be afraid to shoot me an email. My Skype is also on the contact page. Guys, every now and then, I will. If you try to get me on Skype, do me a favor. Say, hey, it's so-and-so from class. Otherwise, I think you're one of those bots trying to get me to look at pictures of you. And I'm really not interested in that. But there's my contact information. Use it. Guys, ask your questions. But let me throw a little thing out there. If you're not posting in the classroom, if you're not asking questions in the classroom, I'm not going to give you a big private session on the side. That's not fair for my time. So make sure that you're doing what you do in here so that I can take care of you outside if you need something specific or if you need me to add a lesson to the day. I'll see you guys in the morning. Thank you so much for being here. Be good, everybody.